Are we good? My phone just finished updating, threw me off. Hopefully this isn't the update everyone's been bitching about. We'll have to find out. Do that in a second. Get a link first and foremost. Also, don't know how long I'm going to be streaming for. It's probably going to be a pretty short one. We got stitches all over, right? But your boy is hurting. I am hurting. There's like a new interview just came out. Probably just gonna watch that and then go like lay down and sleep. Most likely. What should we call this? Sitting sideways. How about that? Sitting sideways. Boom, 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 boom. 91128.1. Nine 11375.3. 90542. And the value area low 89296.4. Okay. Just surprised we didn't get this thing right. Ended up bouncing right by the box. Oh, do we do this backwards? Oh shit. Boom, 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 boom. Honestly, I did not keep up with all what was going on today. I got surgery in the middle of the day. So gotta get caught up myself, right? See what's going on with this stuff. Well, it didn't seem like I missed much. Not seem like I missed a whole lot. This Visa chart looks interesting, right? Visa chart's looking kind of interesting. Boom, 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 boom. Like the dump on earnings, interesting. Probably check on some of this biddy data, yeah. Boom, 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 boom. This is coming out of nowhere. I mean, obviously I wasn't around to be looking at this stuff, but it seemed like it just popped out of nowhere, right? And also like the alts didn't really come along. At least the ETH didn't. I went to the gym to go just to go walk 'cause I can't work out. My arm is just like bleeding everywhere. A fucking freak. Interesting. A random spike in Binance spot and perps. Interesting. In the ideal world, we would have grabbed this first, right? The fact that we're leaving this behind like this, a little sus, right? A little suspicious. Especially if we tap this and then start going lower. Little sus. What else did we miss? I'm dead. The way of the dodo. Oh, 8 grand. Then you lost 8 grand? Oof. Wasn't that thing in like profit you said? Wasn't that thing like 5 grand in profit? How'd you let that come about? The options suck, right? For all you know, next week it's exactly where you thought it was gonna be, and you just got played because of time. Overnight. Yeah, I guess I had quite the drop yesterday. This bar is like alarming. Mm. I think Nvidia 7% day. Futures are gapping down pretty aggressively right now. See if they come back and fill the gap. Well, at least these two. The other one's not so much. These are kind of just whatever. Russell and the Dow Jones. Pretty interesting day, right? Pretty interesting day. I'm surprised that this thing didn't like sweep the lows. Same with Bitcoin. Surprised it did not end up finishing the move down here. Kind of rallied up back up. All the other stuff do. Hmm. Interesting. Yeah, I'd be pretty surprised that happens, honestly. Pretty surprised. It's Christmas, right? Christmas is coming. It's basically like what? How much time do we have left? Like 1 week. Wouldn't be surprised if everything just ends up sitting sideways until the new year. Maybe we like float up a bit, but I wouldn't be expecting some like parabolic run up right now. Like the lower time frames. And maybe there's some like random catalyst that occurs, but there's no one here to put on trades, right? Everyone just go on vacation. So unless us little retail peasants can float the market up. Not expecting a whole lot. Doesn't seem like we missed a whole lot, honestly. Like the order book's like looking the exact same as yesterday. Like no crazy positions are really open. Open interest has been sitting sideways. Let's just check on Binance real quick. Okay. Like this candle like stopped out a bunch of longs on Bybit. This candle stopped out a bunch of shorts on Binance. And the same with this candle, stopping a bunch of shorts on Binance. But like when I say a bunch, we're not talking some like crazy amount. A couple hundred Bitcoin per exchange. And this move was just like a spike in Binance spot, like causing this move. But other than that, there's like still a massive bunch of sell walls here in the perps order book, and then a bunch of buy walls in the spot order book. And they've been there for like a week straight at this point. Pretty boring, right? Pretty boring price action we're seeing here. What's going on? Bit of a snooze fest. Okay, let's watch this thing. Oh, they changed the title of the video. What the hell? The video was called "A Scientist Turned Trader." Now it's called. Interesting. We have our notes. In case you need to write anything juicy down.
Return on his trading capital.
Most profitable traders make most of their money on only like 20% of trading days.
True. Everyone's the same, right? Everyone's the same. The Pareto principle.
This guy made a 40,000% return on his trading capital.
Most profitable traders make most of their money on only like 20% of trading days. If you can't make money paper trading, you're sure as hell not going to make money. The hardest, easiest way to make money, I think that
True.
captures trading perfectly because...
Meet James Krieger. In today's episode on Words of Wisdom, we find out exactly how James took $17,000 to over $1.3 million in verified profits.
Being a good trader means knowing when not to trade. Knowing when to sit on your hands and not trade is just as important as knowing when to trade. What makes you a profitable trader? It's the...
Oh, this new iPhone. Oh. Is this the glass thing everyone was complaining about? Oh. This looks so weird. Can I change it back? Remove a glass. Update iPhone. This is so ugly. Okay, we'll play with this later, but wow, that is annoying. I shouldn't have updated my phone, damn. It feels bad right there.
Find out the reality of trading full time.
Make yourself earn the right to bigger position sizes. Like I said, treat yourself like an athlete. If you're not playing well, then that means you got to practice more, you got to sit on the bench or whatever. If you have a problem taking time off from trading, that means you have a problem.
How much does intuition play into your trading goal?
For me, not much. There have been so many times when my intuition has been wrong. There are times where I had a bad feeling about a trade, yet I made money on it. The thing what I like about that is if you know there's an edge to your trading strategy. And what I mean by edge is
number one podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Welcome everyone back to the Words of Wisdom podcast. We are back once again and still the number one trading podcast in the world and the fastest growing thanks to all of you and our incredible guests. We are continuing our incredible US tour, talking of which that is brought to you.
Is it actually that big? How big is that the Lion one? That one's way older, right? Trader Lion. Because some of this guy's earlier videos were like just great grifters, right? Trading. I mean, there's definitely bigger individuals in this channel, but in terms of podcasts, is this the biggest? Who knows? Who cares?
They've sponsored and helped us to put this tour together. So huge thank you to them. But we're here in, I was about to say sunny Seattle, but it's not very sunny here. It's very much like the UK. Very much like the UK. But we're here in Seattle. It's an amazing looking place. I don't get to go around too much because obviously we're doing these podcasts, but it looks incredible. But we're here to speak with a verified trader on Kinfo who's done $1.5 million to date, over 40,000% return. It's the one and only James Krieger.
Oh, thanks for having me.
It's my pleasure. It's my absolute pleasure. Thank you for being here. And I want to go straight into something because I did get to watch a podcast you've done in the past. And you said this statement, which I think was, really makes you think. And it's so true as well. But I'd love to hear you just maybe expand on it, which is you said that trading is the hardest, easiest money.
The hardest, easiest way to make money.
I know you did it the other way around.
And I don't want to take credit for that quote because I actually heard it from somewhere else. I don't know who said it. But yeah, the hardest, easiest way to make money. And the reason I think that captures trading perfectly because I think to an outsider, it looks so easy, right? You're just pressing buttons
Yeah,
and it just looks like you can make all this money.
true.
And I think there's a
There are
section-
people asking about trading. That, like, they think it's like a fucking hobby. Like, they think they ask me as if they're doing just like a fucking learn like a weekend and that's it. That they're juicing on trading. And I'm always like, okay, like a full-time job, right? At least when you once you learn, 'cause, like what he's saying is true, right? It's like the once you get past like the initial learning curve of like becoming like profitable, however you may go about doing it, and the rest is kind of like I won't say smooth sailing. So ideally, you are continuing to like improve, and also the markets do change. You need to be on top of that. But once you're rolling, you're kind of rolling, right? That initial hill can be quite to the hill for some people, though.
bias
Most people.
I would say maybe a reporting bias in the sense that you hear about all these profitable traders, which makes it also look very enticing and easy and everything. But then you get into it and you realize how difficult it really is and why so few traders are actually successful. And I think it's one of the hardest things I've ever done. People had this idea that you get into trading and you'll be able to quit your full-time job and you'll have all this free time and stuff like that. But I probably work harder at trading than I would if I was at a full-time job because the amount of studying you have to do. I mean, you're kind of like a pro athlete in a sense that you have to do a lot of training in a sense. I'm always back testing strategy ideas, studying charts. I journal my trades, all those things. It's a lot. There's a lot of work involved if you want to be a successful trader. And so
Trading is the largest body of knowledge I've ever attempted to learn. I guess it depends. Like if you like take a time to sit there and like learn about like global macroeconomics and like foreign exchange for currencies and like all that, yeah, there's like a lot to go through. I don't think you really need that for trading, right? Necessarily. But there is like a lot, right? 'Cause at the end of the day, the knowledge like extends to everything, right? It's like anything impacts the game, like global politics, technology companies, health companies. Like it all ties into in like some capacity or another. But I don't think you need all that knowledge to trade. Like for instance, if you look up like the turtle traders, like that whole like experiment that they played out, they weren't like global macroeconomic experts, right? They just taught them the strategy of like these are the rules. Take a trade when these things are happening. If not, don't. And they all became profitable traders.
Yeah, it looks easy, but it's actually very, very hard.
Definitely. And I love what you said there in terms of the athlete side of things, because S&B Capital, that's what they
Really understand the markets. Does anyone even understand the markets? That's the thing, right? Like because there's no one that predicts them like accurately. Like accurately being like above like 60%, 70% in like the long term. It's like impossible, right? It's impossible. There's like just so much going on and so much that can happen that like you don't know. That can happen in the future. It's like seems like an impossible task. Like today, for example, like who the fuck knew that like the US was gonna be like seizing these He's like Venezuelan oil ships out of nowhere, seizing their oil tankers. Like, sure, it didn't have some like crazy impact on the market, but it might have had some impact, right? Who can anticipate that happening? And, like maybe tomorrow, like Venezuela strikes back in some like unforeseen way that causes like fear into the market, blah blah. But then not just like one day out, right? Imagine trying to forecast like a year out, 2 years out. It is fun though, like in the sense that there is so much to kind of nerd out on. It is like a fun endeavor, so you don't get bored if you like enjoy it. Like it's been like 2 years straight of like learning for me, and I haven't gotten bored yet. And there's so much stuff I don't even know. So much, like way more that I don't know than I do.
They're very big on that in terms of comparing to trading is probably the closest to high performance sports and athletes as possible, because your attention to the detail of performing at your best consistently, reviewing old trades, reviewing your performance, constantly essentially
No,
looking
I
through books to
agree,
inform
but at
yourself.
the same time, like as someone that played video games professionally, and I swear by this every day when I talk about this, I'm telling you, playing video games professionally is 100 times harder than trading. 100 times harder. Like this stuff is so easy. It's so compared to that, it's so easy.
In the markets, etc., etc. The comparables are there across any sort of athletic sport and high performance job. But it's funny you mentioned that in terms of
I want tickers to watch for a macro event. Yeah, I can imagine. Although I feel like it's a lot easier to do nowadays, right? Like 20 years ago, yeah, it'd be pretty hard to do that because if you wanted to learn it on your own and you couldn't find like some random article in like a forum online, you have to like really sit there and give things thought via reading books and whatnot. Whereas now you can just toss in like Gemini or ChatGPT and it'll kind of like lead you in the right direction. But it is interesting, like when you like even when you were mentioning like the natural gas stuff in the winter, like I didn't really like I don't trade natural gas, so I like didn't know any about that stuff. But now that you mention it, is like interesting, right? And then it kicked off like a whole train of thought of like things that have similar effects, like seasonal effects like that.
I mentioned those accolades at the very beginning, the returns, the percentage returns. But as you mentioned, it is so hard. And at one point, you performed very well early on in your career, and then you actually blew up, right? And you had gone full time at that point. Can we talk about that? Like,
Yep.
that's sort of
Oh yeah, I got my start in trading. Started just kind of dabbling in, I want to say 2007, 2008, around that time frame. And actually, it was Tim Sykes. That's how I kind of got introduced into the trading world. And I thought, looked like there was a lot of potential here. And so I worked a full time job at. The benefit of being on the West Coast is that the market opens here at 6:30 a.m. Pacific time. So I would have time to kind of dabble and trade a little bit before I'd go to work or something like that. So and I
Interesting.
got good enough to where I felt like, hey, I think I could do this full time. And I ended up quitting my full time job to trade. This was before
Interaction between the bonds and stocks, commodities, etc. Yeah, like the truth is, like, I don't even like pay attention too much to like the Japan stuff. Like, yeah, but I'm not watching bonds and like the UK stuff like that. Maybe there's like maybe it's worth paying attention to. Well, for how I trade right now, I don't think it's particularly relevant. I'm just taking a trade based on like the data like in the moment, and then what happens after that, it's like up to the market. Also, pretty crazy. This guy quit his job and blew up his account. That'd be pretty alarming.
info. I was on Profitly at the time, and I was in the top 15, 20 traders on Profitly at the time, and I was doing really well. One of the things about the market is that it will reveal if there's any problems in your risk management, any problems in the way you're doing things. The market will eventually expose you,
True.
right? And
The math will get you.
That's what happened to me. I kept getting more and more aggressive with my trading.
Most people don't know even when
I
the bond
also-
stocks
And
go
one
up,
thing I want to recommend to any traders watching
rates go
is
down.
make sure you're putting money away. Like especially if you're doing well, take money out of your accounts, put it away. I wasn't doing that. I felt like, oh, I'm making such good returns on my money. Why would I take it out and put it in a savings account or whatever like that? I'm doing so well, right? And so I wasn't paying myself. Eventually, I got too aggressive on some short positions. Actually, remember the ticker symbols. One was Lake, Lake. The other one was APT at the time. They were running on, I don't remember why they were running at the time. So this was late 2014, and I got too aggressive on a short position, and they started to squeeze late in the day, and I didn't take the losses like I should have. I kept thinking, oh, it'll come back down, and it kept going against me. And then the worst thing that happened is when your broker calls you, says, hey, we got to
The margin call.
you know. And I remember I lost over half my trading capital in one day. And I still had trading capital at the time, but it mentally wrecked me.
Because you had, if I'm not mistaken, about 6 figures, multiple 6 figures maybe at the time.
Yeah, and then it mentally wrecked me, and I wasn't able to come back from that. I
Why?
kept going on losing streaks and stuff like that, and eventually I ended up draining all my capital.
I mean, if you did it once, you can do it again. Just one bad loss, but you guys see it was quite shaken up after that.
Clearly I wasn't, and then the problem is I'd gone full time and I had no backup source of income or anything like that. So I completely stopped trading. I started my weightology business, which was, fitness related. So I focused on that, but on the side, I still did paper trading on the side because I knew that I could trade. I had to get out of my own way. And I felt like I had to establish a better set of rules for myself and everything like that. But I knew someday I would come back, but I had to.
When it first happened, did you think that way as well, or did you think, oh, maybe this is it?
When it first happened, I didn't think that. I thought, okay, I can come back, but I think I was mentally I just wasn't in the right frame of mind anymore. So yeah, I spent, I think, a year and a half, 2 years paper trading.
Had Doge at 0.02. Damn, that's like 10x, 100x. Like 300x or something? Damn. I mean, you don't lose money, right? Round tripping, it's better than losing at all. But yeah, there's a lot to give back. I never get why people, like, I don't understand the logic of that stuff. Like, to me, like, I never really got the, like the whole idea of getting like a 100 bagger, like, 1000x trade. Like, I don't really see like the. Like, I don't get why people are so hung up on trying to do that. It just seems like it's like the hardest. Like, if you really want to get like a 100x trade or something, or like, let's say you want to get 125x on one trade. Like, isn't it easier to just do like a 5x trade into like another 5x trade into like another 5x trade? I mean, it's like the same thing with like much less risk. And then you can like break this down even more, right? Like 2.5x trades. So me, like, I'd always rather just take profit, because like I know I can take that profit and compound it in another trade, as opposed to like trying to like go for like the all or nothing home run. It's like that guy in crypto. What's his name? The bonk guy. Dude, that guy had started with 16 grand. And he went all the way up to like $30 million. And he didn't take any profit on this. He was trying to get this even higher. And then on the October 10th liquidations, he lost it all. We just gave it all right fucking back. For what? What's the point of that? You can take this out and like put it into like safer investments, and like in 2-3 years you have 100 mil. As opposed to like leaving in some like risky ass meme coin, trying to do another like 10x from where you already are. Bum, bum, bum. I was of the belief that Elon Musk was totally going to make it get fully adopted. I wasn't around the time, so I'm not really familiar. Like I knew that like Dogecoin was like going off and whatnot, but at the time I wasn't like in the markets myself. I mean, seems like a bit of a far-fetched thing to believe in. But maybe I'm not sure what like the kind of stories that were coming out at the time to like support that may have been. But even then, I probably would have sold some. Because for instance, like for me, like when I first got into crypto, like there was like a bunch of some of the shit coins I bought, like literal shit coins. And they had like run a bunch. And I sold out a lot of them on the initial pump, and some of them like ended up going higher, and some of them like ended up kind of sitting there, and some like nuked right after. But like looking back on all those charts now, they're all at like fucking zero basically. Just like all the shit coins people would be on like Twitter shilling and whatnot. So if I'd held on to those things thinking that they're going to keep going, I would have just incinerated my money. Yeah, double-edged sword, because a lot of people that were shilling that stuff on Twitter, there was like another part of Twitter that was like saying to avoid that exact scenario, like don't get caught holding those bags. So it kind of saved me, because like, did I really know what I was doing? Not really. Not really. And most of those projects were just literal fucking vaporware. And 70 didn't seem like a lot. Bitcoin's at 60,000. How high did it end up going? Dogecoin? I guess this isn't the full chart. It must be this one, yeah. Yeah, that's tough. Wow, it went down how much in like 2 days? Down 50% in 2 days. Damn. Item. I used to trade on the BSC. What is that? BSC trading. BNB Smart Chain. Or like low caps, I guess, on that chain. Yeah, because like a lot of the shitcoins that I bought when I first got into this stuff was like just random like ETH coins. My friends, I'm selling 0.69. I mean, they almost got the Pico top doing that. They're probably laughing at the bank looking at that chart afterwards. Fees are ridiculous. I never got into it. Yeah, they weren't as high. Like, because I mean, like me doing this was like not that long ago, right? It was like in this time period. So it was like 2023, almost 2024. So at this time, the fees weren't that high. Because I had read some horror stories of people that were saying that like back then during this cycle, like the fees were like hundreds of dollars for one interaction. Like, I think the most I ever paid for something was like $70 or $80. And now they're like basically nothing. They've lowered them quite a bit. Finance fees were like pennies. I mean, that's how it should be, right? ideal world. Like, I mean, looking back on ETH from all the stuff I read, it seems like it was pretty poorly designed. It's why they have to keep doing all these like network upgrades, right? Half the time they're not even like adding anything like new; they're just fixing flaws. I mean, it makes sense though. Like, aren't most of like the devs like Vitalik's age? Like, how old is this guy? Yeah, this guy's like 31. I assume everybody else was like, so like they would have been like in their 20s when they were designing this thing. But not exactly the most experienced of systems developers. It seems like most of ETH's upgrades are just like essentially just tech debt payments more than anything. I mean, I've never used a Binance one though.
Didn't trade with real money at all because I wanted to make sure there's a difference between paper trading and real trading. I mean, you have to feel the pain of losing real money, but at the same time,
That's not true.
recommend paper trading to beginner traders because if you can't make money paper trading, you're sure as hell not going to make money with you're not going to make with real money.
That's true. Yeah.
So you at least got to show that you have an edge, right? And so I established, okay, I got an edge. Strategies are working. Then I was able to build up just enough capital to start some small trading accounts again, and I was under the pattern day trading.
You know, I feel like people that say that about paper trading, that like, oh, like you can't learn your lessons paper trading, they're just not competitive, right? They're not competitive enough. Because if I lost money paper trading, boy, I was pissed. Boy, I was pissed. Just as mad as losing real money. Same thing in video games. If I like fucking threw around in Counter-Strike or Valorant doing something stupid, I was fucking raging. And then that's for nothing, right? There's nothing on the line. Other than like virtual points on a screen. I'm trying to win. I don't give a fuck about any money. I'm trying to win, boy.
So I split my money among I think it was 3 or 4 accounts, so I could at least get 3 day trades in each account. Yeah. And I just started to go from there, and it started to ramp up, and and this was late 2018, early 2019. I had started again, and
10 years.
2019 had a decent year. 2020 got even better. And then 2021 was my like breakout year, and really that started into 2020. There was literally like a 3-month. It's kind of weird. The majority of the money I've made probably happened in a 3-month period.
Why is this guy like? Mirrors this guy like has some kind of anxiety attack, like fucking shaking.
Took advantage of the market conditions, but this time I was smart. I paid myself, and I still do this. If I'm not trading well, I size down or I pull money out of the account, so I'm not trading with as much. The fact is I've, most of that money I've made, I've protected, and
I think that was from that was like the main lesson from the previous.
From cycle. The previous,
True.
You got to pay yourself.
This is the main lesson, right? It's not how much you make; it's how much you keep. Right? That's what trading really is. Because anyone can get lucky and make money, but if you don't know what you're doing, you're just gonna give it right back eventually. The math always gets you, right? It always exposes you.
When things are going good, because you never know when things are gonna go bad, and just mentally it puts you in a better frame of mind, right? So if I do go through a rough patch now, I'm also much better. Like I'm much better at obeying stop losses and stuff. I mean, really, in the past couple years, I think there's only been maybe 2 times where I did not obey a stop loss. So it's like
I fuck it up every time. I'm not disciplined. Fuck what up? Fuck what up? I believe you have it in you to do it, right? Especially if you know that you're not doing something right. Which is the first step, right? First step is admitting, like, yeah, I'm I don't know, oversizing trades when I shouldn't be. Admitting it is the first step. I make a nice bag, trade $300 into 1,300 in March and lost it all. No, but like why though? Like the idea of like why? $13,000. Yeah, but the numbers are just numbers, right? It's like whatever. We started with $1 and made 300. It's like the same thing. Was Trump fucked up with tariffs? Yeah, but it's not that, right? You can't say that. That's like an excuse. Because there are plenty of traders that like traded that sequence of price action like perfectly fine, right? Tariff news or not. Mounted at 430. Because like if you lost it all in one trade just because of one announcement, that means that you had your whole account. Like the implication of that is that you had your entire account at risk in one trade. So like, is it that he announced that or that you risked too much in one trade? Probably the latter, right? Was nailing every up and down from his BS. I got it to 1,300, 13,000. Yeah, but that's not like. First of all, like everyone made money on the Trump pump, right? It's pretty hard not to make money when everything's going up. You can just kind of like close your eyes and just pick a ticker, go long, and you're making money. It's like doesn't mean you know what you're doing, kind of thing. Well, the idea is it only takes a few doubles to get you to 1 million. Yeah, but if it takes you one loss to get to 0, like, it's bound to happen, right? Like essentially you're saying, okay, I'm gonna keep flipping this coin every time it's heads. I'm gonna double my account. And the one time it's tails and blowing everything up. Probably not like a long-term viable strategy. Like what you're describing, that is like one of the most common things people fuck up on, right? It's like trying to rush the process. Trying to get rich quick. Because like imagine you hadn't lost that. Imagine you went from like 13,000 to like 11,000. Then you kept like trading consistently with discipline. Then like right now, 8 months later, essentially, you could be at like 120, 200 grand. And then next year, that 200 grand could be like 300-400 grand, maybe even more, depending on how the year goes. And then like the year after that, you're approaching the 1 million, right? So like you got there without the stress of losing a bunch of money either. That's the other, that's a thing for me. To me, like it's when I was like learning how to trade, whenever I put on like a bad trade, like the stress of being in that trade was like Like I know I shouldn't have taken this thing. Well, why the fuck? Like, this is such a shit trade. But this, it gives you like anxiety. So like, eventually, what I started doing was whenever I would like take a trade that like I was like, okay, it's probably not like the. Like, I don't think this through. I'll just close the trade. I'll just pay the fees and get out with like the tiniest of losses and stopped. Lack patience. What, just write something down? I don't know, like come up with a way to resolve that. Because then you'll be that much better of a trader, right? Because like this trading game is not about like individual trades. Like the real game is your account equity curve, and this is gonna last from now until you die, assuming you keep trading. So like you want to do things that like benefit this, not that just benefit like one specific trade being a home run or not. And like the more things that you improve, like the faster this thing starts growing. Because like it's hard, like part of like trading is like when you start making like serious money trading is when you start compounding, right? Like you're winning big winning trades. But if you're like always like kind of setting yourself back at the start with like big losses, like huge losses, like you're never gonna make it here. And you'll see people say, everyone says the same thing, right? Like the further you get into trading, like 1 year here, like let's say this is like a 1 year time span. Like in this 1 year, you will make more money than you ever made here. And then in the next year, you'll make more money than you ever made all of here. And then the next year, it's the same thing, right? Over and over. Your trades start growing so big in size that like in 1 year, you make like fucking 10 years worth of trading. Or like working on your regular job, whatever. It's like a video game. It's like the World of Warcraft or like Diablo 3, right? It's like a big scaling game. It's about the percentages. And at the end game, the percentage multipliers are like so high that the numbers are just like ridiculous, right? And it happens a lot quicker than you would expect. If you just like stay disciplined on with like a set strategy or like set of strategies that you know work and you stay disciplined with them and patient, it'll come a lot quicker than you think. A lot quicker. Because those like big losses that you like risk too much and set your account back, they really hurt. Really hurt. Because any money that you make off that is just to get back to break even. From where you were when you did that trade.
I'm really good about taking losses now too, which has also kept me in the game. Because you hear about this, you hear about a lot of traders like you'll see some new traders who made all this money, and then a year or two later, you never hear about them again.
Yeah, well, during that period,
True.
that huge P&L, that's what most people who did make money in that time, apparently most of them are just gone now.
Yeah, and that's the thing. Probably a lot of them, they end up losing it all, and you never hear about them again. And it's like me, I've kept most of my profits because I pay myself, because I save money, because I size down when I'm not doing well. I have, even though I'm a day trader, my perspective is long term. I want to be able to trade for the next 10 or 15 years. So I don't want this one trade that I'm doing now to ruin the next 10 years or whatever, right? And if I'm
Why is this guy so nervous?
Think about, hey, I just got to manage my risk. And here's another important statistic. Again, I don't remember where I saw this. I read that something like most profitable traders make most of their money on only like 20% of trading days. Yeah. And I think that's an important perspective that even really influenced me, because it shows you that when things aren't going as well, make sure you're managing your risk, because the good days will come again. And if you're controlling your losses and keeping your risk small, even good traders, the best traders don't make money every day.
Yeah.
Like,
I think that's the expectations that people put on their trading is just false expectations, unrealistic expectations. Because I remember in that same podcast I'd watched, you talked about one of the reasons for the huge loss and blowing up at that time was you were comparing to other traders who were like sizing up big.
That was another thing. I got caught up. There were a couple traders in the Investors Underground chat room that I kind of got caught up in comparing myself to, even though I didn't need to. I was trading fine on my own.
No, a lot of people use that chat. even now I still see it, right? This investors, it's the first time, or not the first time I've heard of this. Investors Underground. Him and that and the other guy he mentioned, like Timothy Skies or whatever. Seems like a lot of people dabble in their chats for like trading ideas and whatnot. Maybe it's worth the fee, because I think it's like $3,000 to get into that chat, something along those lines. Let's just go look. Investors Underground. Oh, it's on sale for 2,000 half price. My bad. But yeah, I've seen a lot of pretty big traders that are like advocates of this. Interestingly enough, don't know if it'd be much use at this point, but if I started again, maybe it would be useful. It's like a noob. Maybe it's still useful now. Interesting. Plus, if anything, you can kind of like write this stuff off as a business expense, depending on where you live.
They would use, and so I started to try to imitate their size, and that just, you know.
And then now
wasn't
you
right for
stick
me.
to, if I'm not mistaken, a 2% rule. So you risk 2%.
Yeah, so I'm 1 to 2%. When I'm not trading as well, I go down to 1%, but my max is 2% of my capital per trade. So, and what that means is wherever my stop loss is, if a trade hits my stop loss, I'll lose 2% of my capital. Right now it's at 1% because I felt like I haven't been as consistent as I want to be. And so for me, it's like I have to earn the right to bigger position sizes. So like once I go on about, let's say, a 10R net winning streak or whatever, not 10 winning trades in a row, but basically 10R net, which I'm pretty close to that over the past week. I've made like a 9.5R over the past week. I'll bump it up to 1.5%. Once I go another 10R, then I'll go back to 2%. But I'll never go beyond 2% because once I remember that was another thing that kind of led to that blow up, or after that blow up, I thought, oh, you know, I think I could get away with risking like 3% of capital per trade. But the problem is when you start doing that much, if you go on a losing streak, your drawdowns get really big.
Yeah.
And that's the other thing to a lot of traders. They got to think about.
Like, okay, well, first of all, I don't agree with how he goes about his sizing. That's a weird way to do it, right? Like, ideally, you're doing it based on like the quality of the trade that you're seeing. Maybe he's one of these traders that only take the same trade over and over and over, in which case not directly applicable to him. Like, ideally, you have some kind of playbook with a variety of trades, some better than others, some happen on the larger time frame, some don't. Ideally, you're sizing up on the larger time frame, higher probability trades. Also, what he's talking about, essentially, like, if you want to look up the math behind it, it's the risk of ruin, right? You want to look up the risk of ruin, because when you start sizing up in trades up to like 4 or 5 so on %, the risk of blowing up your account increases like fucking super exponentially. Because if you start to risk like 5% of your account per trade, you lose like 3-4 trades, you just nuked your account equity curve, right? And then if you start to like go back down to 1% sizing, it's gonna take you a long time to get that back.
You can't just think about what's most profitable, but also how does it psychologically affect you? Like me personally now, I would rather be a little bit less profitable but more consistent. Like when I'm keeping stats on my trades and everything, I would rather have a trading strategy that has, you know, maybe it gives less trade opportunities, but it has a higher winning percentage, and you know, so it's more consistent. Because there's some good trading strategies out there that will be profitable over time, but you have kind of wild swings. And
yeah, so you're going for like quality over quantity.
yeah, that's the thing. It's like mentally, like I don't like the wild swings, and so you have to think about whatever trading strategy you choose for yourself. It has to fit your risk tolerance and your psychology. Some traders, they can handle the wild swings, are cool with it, but I'm not. So I have to do what works for me.
I heard you say in terms of the percentage risk, you think that most traders out there should probably try and adopt that versus your contract sizes or your dollar amounts.
Yeah. I really like percentages because the sizing kind of takes care of itself, because if you're trading well and your account is growing, well, the amount you risk per trade grows because it's a percentage that you're risking, right? If you're not trading as well and your account is shrinking, well, you're risking less and less as your account shrinks. So yeah,
it's a term, if I'm not mistaken, is like negative compounding. If I'm not mistaken, could be wrong there, so don't shoot them.
Well, the thing I always tell people to visualize how this works is like pretty simple, right? If I give you $100 and I tell you like you can only risk 1% of your account per trade, and this is specific like for people that blow up their accounts, okay? So like for those kind of people, if I give you $100 and I tell you you can only risk 1% of your account per trade, I would be surprised if you could blow up your account trying to blow it up. Doing this, right? Just losing every trade. It's not gonna happen. It's not gonna happen. You're not gonna get, by the time like you get to $1, it'd be like an eternity, literally an eternity. So kind of just goes to show you with the right risk management, it's very hard to lose money trading, or at least like go deep in the hole. Because you can't even try to do that. You would just be winning trades by chance that wouldn't allow you to go that low.
Simply like you can't essentially blow up your account if you're constantly using the risk element, because
True.
as long as you keep going down, because most people might go, okay, if you're risking 1%, 100 trades you've lost.
Yep.
But it doesn't end up being that, because as long as you're sticking to that 1% for the capital amount, the balance amount, then it will consistently get lower and lower. So it'll end up being like, it'll get to a point where it's almost impossible. Like even if you get to $10, right?
And you're gonna win trades along the way.
For example. So I do think it's very interesting because, as you said, or witnessing your own journey about comparing to others, I think that's a huge thing right now. You probably are you on Twitter at all?
No, I'm not on Twitter anymore. I kind of left when I think felt like Musk ruined it. So
well, that might be a reason, but like, there's so much, especially over the last few
How do you
years,
ruin
all
it?
or the last year, all these different plays and
This guy's a hater.
movements in the markets, and not everyone's posting, but you're seeing loads of posts of I made 1 million here, 2 million here, 5 million here, all these huge returns. And I can imagine there's a lot of traders out there who lack experience and probably haven't been through blowing up or learning these lessons, who are probably in that moment right now where they're looking at that and thinking, I need to size up, I need to start sizing into my trade so I can be like X person, so and so person. But I loved what you said in terms of the percentages, on both sides, the losses and the wins. But also, as you mentioned, why 2%? I remember you saying that when you hit 3, if you lose 5 trades, then now you're talking like 15%, right? And it can quite easily compound beyond that 2% risk.
Yeah.
I mean, I don't think it's that, but I mean, that is funny. It is. I thought you were just nervous or something. But I don't get where that comment came from. Like, okay, I used to use Twitter, like back when it was Twitter, when I used to play video games, because that was like, Twitter was like the main way you communicated with people in the community online back then. Like people that work in the pro scene. And it was fine back then. And then there was like the whole period of like COVID censorship type left wing only ideologies. It was like a bit weird, but still usable. And then now it's like probably like the best it's ever been. I mean, I don't know, hard to say. I can't remember exactly how the algorithm worked back then. But there's tons of useful stuff on here. Like there's tons of interesting people posting like interesting long form content for whatever your interest is. That's the other thing. Like whether you like trading or biology or computer science or whatever, right? Quite likely the most notable people in whatever field of interest you like is on X, putting long form content out. So it's my favorite. I don't use any social media but X. And it's always been that way. I've never been like an Instagram person, no TikTok, no none of that. But I think it's because I like reading. So like that's kind of like biases it, I suppose, in a sense. But I think it's incredibly useful. Look, I learned so much from there. Obviously, there's a lot of garbage too, but they convince people Elon is dumb, nothing with technology. Isn't just some pampered rich kid. Yeah, I don't get where people get that like idea from, right? So whenever like, okay, first of all, when you hear him talk about stuff in an interview, obviously, is he the most knowledgeable person about some specific thing at one of his companies? Maybe, maybe not. But he's certainly not like completely fucking clueless. And whenever they interview employees of these companies, whether they're current or ex-employees, they all speak very highly of him. Same with his competitors. Yeah, it's the people that are on social media who have never done anything that are judging the most. A bit ironic in that regard. The people like that are in the position to judge the least are the ones that judge the most.
Yeah. I always felt 2% is, I don't know why, it always just felt like the best balance between, okay, if I have 3 losing trades in a row, that's 6%, I can handle that or whatever. But 2%, can compound really nicely too if you're winning, and especially those 3 months that I did, I think it was December 2020, January 21, February 21.
Were you sticking to the rule there as well?
Yeah, I was doing 2%. But it was just one of those things where kind of preparation meets opportunity.
Elon was talking about AI in 2013. Tesla stock sold off. Could say he was a nut. Yeah, I mean that's just how people are sometimes, right? At the end of the day, it's like the intelligence distribution by the nature of the math, most people are just likely to be average or around average. Also incredibly susceptible to like herd mentality, which I think is the bigger problem more than anything, right? The people don't inform themselves on things, and then they just listen to like their neighbor inform them on the topic, and then whether they agree with it or not, they just go along with it because that's what most people think. And they're also like in fear to say otherwise because that is what most people think, which is a bit sad. That's how far ahead of the curve he is. Yeah, that's what I always tell people. I'm like, most people have not even given thought to humans leaving Earth, right? Or like a potential extinction event happening on Earth and us having to escape, like a doomsday scenario. Yeah, he already has a company that's already has functional rockets and going into space for this exact kind of scenario, and most people haven't even given that a thought. So like obviously something that's given a lot of thought many years ago. Same with most of his companies when you think about the design of them, right? Need more water. No, I'm not some like Elon Musk like fanboy either. Like I don't. To me, I'm just another regular person that works hard at what they do. I'm sure if I sat down with him someday and talked to him, probably be stuff I wouldn't agree with. I'm not some like delusional fucking irrational hater either, just for the sake of being a hater, which is what most people are.
Because I had studied gappers so much and developed some good shorting gapper strategies, and that must from December to February.
Purposely spent his PayPal fortune on things he knew venture capital wouldn't touch. I'm not familiar with the story, but I mean I can imagine. Because like it wasn't like SpaceX at the start like quite unprofitable, like essentially just incinerating money. So I can imagine he had to put a lot into it himself. Also, interestingly enough, I didn't realize that Google has like a huge stake in that company. So one of like the majority owners. Shout out to Google.
The number of gappers on a daily basis just blew up. It was like I couldn't even believe what was happening. I would wake up in the morning and run my scans, and there'd be like all these gappers. I was like, "What's going on? This is crazy!" And there were so many trading opportunities, and so yeah, my account compounded like crazy just in 3 months. But then the gappers dried up. Like it dried up after that.
In that time though, like when you have a rule for 2% risk, and there's so many opportunities, how does that play out? You know, because let's say if you have 10 opportunities, are you then taking 2%?
Everything sort of was. Yeah, I can imagine, right? Because like when it's like one thing to have a company. Like when you're proposing a company idea that's on the forefront of technology and needs to have like the technology invented for it to be a profitable company, then a lot of the initial time of the company's existence is trying to invent that product with no sales, nothing to show for it. So I can imagine, yeah, they are a lot of money needed to be dumped in there with the hopes that it would result in something profitable or like usable. Hello, Dev. Hello.
On each one?
Yeah, I'll take 2% on each one because I know that based on testing everything that it's a profitable. There's an edge on the strategy. I know if I take 10 trades even in one day on that strategy, on different tickers, I'm gonna win on most of them, right? I'm not gonna win on every one, but I'll win on most of them. So, but ever since then, then the gappers dried up, and I've actually spent the last 2 years or so developing new strategies because I can't just rely on the gappers. Now there've been a fair number of gappers this year, but they're different. And this is another thing, how market conditions change. And I think this is another thing for a lot of traders that they don't realize. They'll think they found a good strategy, and maybe they did for that whatever time frame, where say the 3 months that they've been trading, and whatever. But then market conditions change, and all of a sudden either the strategy stops working, or maybe like my gapper strategy still work. It's just that the opportunities fitting the strategy, there's just not as many anymore. Now there's been a lot of gappers again this past year, but a lot of the gappers now have been like micro floats, which was very different from 2020, 2021, and the micro floats are much more challenging to short if you're going to short a gapper. And so I've had to develop new techniques and strategies, for doing that. But
There's so many of these people that do this, that they just short these like companies that gap up, whether it's like medium or low caps. Pretty interesting, right? So that's like their main way of trading. I'm very curious to see people like that end up surviving in the long run. Did I find the alien video? Yeah, I did actually. The channel it was on was like it's like some fitness guy actually, funnily enough. I wonder if I can even post it in the chat. I think it's like first things or thirst things first. First things. Oh, here we go. I mean, I don't know if the link shows up in the chat. I posted it in there. If it shows up, great. If not, I'll post in the Discord. Alien video? Yeah, just a random podcast I was listening to in the gym because we were talking about like aliens one the other day, just shooting this shit in the chat. No, they were just like an interesting video about aliens. Like basically some guy that's like dedicated his life to researching UFOs. And like you think it's just some like paranoid fucking guy just like going off about aliens ranting. But it seems like a pretty grounded, reasonable human being. And he doesn't even claim there to be aliens per se. He just has collected a lot of data on various reports throughout history. Whether it's like people reporting it themselves as like citizens or like unclassified government documents over the more recent years. And it seems like they all kind of align in some way, which is interesting. Just something to kill time, right? When you're bored. Yeah, I think I'll need a bit more proof than what was in there to become a full-on believer myself, but something to pass the time.
You have to. That's why you have to. Again, you're like you're an athlete. You have to be constantly studying the markets because market conditions change, and you have to be willing to adapt or develop new strategies. Because whatever, if you have a strategy that's profitable right now, it's.
Oh, can you link it in the Discord? Yeah. Oh, you already put it in. Nice. 8 out of 10 retrace pretty significantly. Oh, the gappers? Yeah. Although it seems like people are like targeting them, perhaps. Apparently there's like algorithms that have been like targeting these things to like squeeze just more and more. I mean, the logic of the strategy makes sense. I just don't know if I'd be someone that wants to do that forever in case it starts to like get phased out. We live in a time loop. We create AI. AI helps us develop time travel. We travel back in time, also the timeline repeats over and over. There's no beginning or end. The aliens are us from the future. Interesting. Interesting. Yeah, I guess I just won't wait to look at it. Isn't that like the theory of Interstellar? I think I watched that movie again because I've only seen it once, and it was like a really long time ago, and I wasn't like particularly paying attention to the movie. I was like having a conversation and whatnot during the movie, so I think I need to go back and watch that. Everyone speaks quite highly of it, right? Or what they call the Jin particle. A Jin particle isn't a real subatomic particle, but a conceptual term for a bootstrap paradox in time travel. An object or piece of information that exists in a self-contained time loop, appearing to have no origin or creator, like a song heard in the future, traveled back in time, and then performed, inspiring its own future creation. This reminds me of the show Dark. Have you ever watched that show? It was like this like German and Netflix show. It's actually pretty good. For our own grandfathers. Or like simulation theory, right? Maybe it's all simulation. Dark, it's amazing. Yeah, that was a really good show. It was a really, really good show. Don't know how I stumbled upon it. Because it wasn't that popular at the time. I don't even know if it ever ended up even becoming popular. But it was like very fascinating, right? Didn't they do some kind of follow-up to that show as well? I don't know if it was as good. Like something about being on a boat, like 1899. I've never watched that one. Yeah, Ulrich. Forgot about that guy. Ulrich. The 100 is another killer show. That one I have not seen. Thing is, I don't really watch much TV. I'm not like a TV person. Like to me, watching TV is if I'm like dating somebody and they want to like chill and watch TV. If it's like up to me on my own, I don't watch anything. I'd rather do stuff like this, like whether I'm streaming or not. I'd probably be watching this right now, or like reading something, or watching whatever on YouTube. Like, isn't this a show where they like? What am I thinking of? I'm like skimming through the plot. Okay, this seems not related to at all what I was thinking. Not anymore, but I used to. Oh, Bebo's here giving us the Bebo Never Wrong Alpha Juice. Short Nikkei. There's lots of seasons, all the very different as it evolves. Probably watch it someday. If someone I know wants to watch it, but there's lots of shows I haven't seen that are on like the to watch list, like The Wire, like Succession. What's the other one people say to watch? Like Power, I think it's called. Same with movies. I have like a big to watch list, but to be determined if we get around to it. Billions. I'll put it on the list, but no promises. Billions, the 100. What did show that? Like the last show I've watched is like what, Stranger Things? Yeah, probably Stranger Things. Not the new season though.
It's gonna dry up at some.
Troll coin. What is troll coin? Is that actually the name of it? What is this? Troll coin. Is this like the new meme coin or something? Ugh. That is funny. I mean, this thing is going to play that much, right? 30% in an hour. Interesting. $30 quick. That thing is like a no market cap, like 30 million market cap. Alarming. Where does this video go?
Some point, you know.
To come back to this, we'll come back to the change environment. Just to finish up on risk, when you started with the $17,000 in 2018-19, were you using that same risk strategy then at the very beginning?
Yep. I was doing 2%. Exact same thing. And you just don't realize. I mean, if you're trading, you know, compounding works very well, right? I mean,
And were you paying yourself from the very beginning? Like I know you pay yourself every 2 weeks, right?
At that time, I wasn't because all my income at the time was from Weightology. I didn't really need the trading income, and I wanted to build the account up. So I did spend a period of time where I wasn't paying myself just because I was in that kind of an account.
Letting it compound a bit
You
more
know,
then.
and I wasn't relying on trading for income. But it was 2020 when the accounts had grown to a point where I was like, okay, you know, I still had, you know, nice income from Weightology, but I was like, okay, I'm going to start paying myself now. And I started treating it just like a regular W-2 job where I would pay myself, you know, twice a month. And usually I'd pull out, I think 2.5% of my trading account. I just pull 2.5% money out, and I'd even run it like I literally treat it like a job. I would actually run it through payroll and everything, and basically give myself a paycheck. You know, I'd set up a company I would trade through, my own company.
Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor.
The thing about this, what he's talking about, like, there's no reason to keep a shit ton of money on your exchange or brokerage. Like, if you're risking, let's say you're risking like $1,000 and that's 1% of your account. So you have like 100K on your brokerage or exchange or whatever. You don't need to leave this on there, right? You should leave like 2, 3, 5K. And then if you need to put in more, just put it in later. So just like leaving this here to risk situation you talked about earlier. About to trade prop firm, they'll force me to be disciplined. Well, how are they gonna force you? I don't know if that's the case, right? Don't they usually like not force that? So people like blow up their thing and lose the, what's it called? What is this? There's like a warning. The stream. For what? There's rules in drawdown, it locks you out. Oh, like you mean like force it so you don't fail? Like fail the challenge, you mean? Yeah, some people do that as well. They have I've never done this, but I know that some people kind of follow where they have like a daily loss limit, like a weekly loss limit, and like a monthly loss limit. So if they like hit like their monthly loss limit a week into the month, they're not trading the rest of the month kind of thing. Vegan. Max 100 drawdown on a 50k account. Yeah, I mean it is if you if it's like a, if you care about not failing the test or like failing the challenge, then yeah, it's a good way to go about it. If you feel like that helps you abide by some kind of rules. Loan sharking? The prop firms? Yeah, they are a bit predatory, we'll say that. I think that's like a fair way to say it. Perpetual debt. I don't know about that. It's just skimming money off of the top, right? Like you have to pay them to pass their test, and then once you pass it, they're taking like 10-20% of your money off the top. Like what the fuck is that? Plus then your max loss like $100 no matter what. I wouldn't look at it that way. I wouldn't look at it that way. Because that's like the same loop that everyone gets into, right? They take a prop firm test, challenge, whatever. They don't take it seriously because they're like, oh, it's only $100 or whatever the fuck the fee is. Then they just have the same shitty trading habits. And then you're back at square one with $100 less. Nothing learned. So I would not suggest using it that way. No, you're using their money. Yeah, but you pay for the test. The test is not free, right? Or maybe it is, I don't know. But I thought you had to pay to do those challenges to qualify to get the account like funded. What is this warning? The audio stream's current bitrate is lower than the recommended bitrate. It says my audio bitrate is 0. What does that mean? You guys can hear me, yeah? You guys can hear me? Why is it saying that? It's odd. Rather smoke crack. Yeah, you strike me as a crack smoker. Like $100 for 50k account, and you have to pass a basic strategy test where they trade with their money. Yeah, that's what I mean though. That's what I mean though. Like, you shouldn't look at it as like, oh, it's only $100. Like any money lost is money lost, right? And it's not money lost, it's time lost. Right? Because you have to allocate some time somewhere to earn that money. Like you're essentially just giving away the most valuable unit of time for nothing. Like the most valuable unit we can measure time. Not the best trade, ironically enough. I need to get water. No more water left. I mean, you get payouts, $100. You use to trade Ks like going to interest, margin, whatever. The numbers are irrelevant, right? What I'm saying is, don't treat it any differently than you would treat your own money. And like, if you're having trouble with patience and whatnot, like write down like I used to have a list, a literal Word doc of like 10 or like 12 steps about like taking a trade or not. Like, is this trade planned or is it some like impulsive retarded shit? If the answer was it's being stupid, then don't take the trade. Boom. Okay, reset the tree, top of the tree. Then is this trade planned? Yes. And then like, why am I taking this trade? And then there's like a whole sequence of steps I had. Should probably do something similar. Because like if you go and you make like a prop firm account and you end up learning nothing from it and losing your money, then why even do it in the first place? Just donating $100 to some business, essentially. Like I'm sure you've seen them online, right? People have like decision trees on Twitter or like X. It's like is this trade planned? Like yes, no. If it's no, then like don't take the trade and restart. Restart. And then like if it's a yes, like have your next set of questions, right? Like are you seeing a lot of edge or like minimal edge? Like a lot of edge, we'll put like a lot. And like little. If it's a lot, okay, then now are you gonna put more size in this trade or not? Here it's like, are you gonna size down? Or are you gonna just not take it at all? Like, obviously, I'm just like making up some random one on the spot, but like, you get what I mean. Be like much more well thought out than that. And then follow it, right? Then you have to follow it. And if you can't, that's a problem. It's like a massive problem. You're gonna have a very hard time trading effectively over a long period of time if you can't even do that. Pretty gonna find one right now, right? These are all computer science trees. None of them are related to trading. God damn. Like here, something like this, right? Here, boom. Like make something like this for yourself. Me personally, I just have numbered step of things like points. Well, a lot of people do something like this. And this is just some like some arbitrary one, right? It doesn't have to be exactly like this. You can kind of make it however suits you. Or just copy somebody else's, right? Like I see these like randomly show up on my feed like once a week. You finish listening to this guy yap.
First of its kind in the
Just-
industry.
just
Now, evaluation
tweaker.
firms have been in the industry for right to happens. This is our prescription all.
It was very helpful because
Link is in the description below. Now let's get back to the episode.
How helpful was that in terms of your psychology?
it was very helpful because a lot of ways. I mean, number one, it was, since I was paying myself, and I started putting money away. I, I knew I wouldn't. I felt like even if I do blow up, I've put this money away now, and I don't feel like I've wrecked myself, right? You know, and I have capital. If I need to, put some capital back in, I'll have some now on the side. It also was very beneficial to my wife psychologically, because like,
I was gonna ask you
She was always like, "Are you paying yourself?" I was like, "I am.
'Cause
And-
I remember she wasn't. Obviously, anyone wouldn't be, but like she wasn't happy at the blow up.
yeah.
right?
Oh no.
But then
not
she
at
wasn't
all.
very happy when you came back into it as well. If I'm not
Yeah.
mistaken.
She was very resistant to me coming back to it, which understandably so.
Of course. Yeah.
And
How did you handle that? Like,
Well, I
so-
just
you just did it anyway.
well, no, it was more like I talked to her about it. I just said, you know what, I'm going to start with a small amount. And I said, this time I'm not giving up Weightology. So I've got all the income from Weightology or whatever. And I had no plans to stop Weightology and do it full time. And in fact, even during that really great run I had in, late 2020, 2021, I was still running Weightology. And that's the other thing is like, I know it sounds glamorous to be this full-time trader and have that as your main source of income, and not have any other sources of income.
Really not.
But honestly, it's a huge weight off your shoulders if you can have, whether it's just part-time work or some other, if you can have some other source of income, it's very, very helpful to you psychologically, because the thing is when you have to make money trading, it's harder to make money trading when you have to make money trading.
Of course, yeah.
And the fact is I took so much of that money that I made 2020, 2021, I put it away.
The thing is, like, there's no goal, right? Like, how many traders do you talk to like, what is their end goal? Like, to trade more? No one really has that goal, right? It's always to do something else that's not trading.
Stuff, and I've had some income just from those long-term investments that I made, so
Because I've never come across an actual successful trader who especially does it long term, who only has trading money. Like, they'll have something. It doesn't matter what it is. Some have communities, some have mentorships. That's cool. But some will have, like you said, like long-term investments or real estate. There's always something that's covering the bills, at least, right? So then, as you say, it's not the money, and it might not be that from the very beginning. In the beginning, it might be that trading, when you're profitable for a period of time, might be the only income. But I think it's very important, as you say, to cover that, right? To cover that when you can, as you can. And I think it's very important not to rush, because I don't necessarily think that you rushed into going full time, right? When you first went full time.
Yeah, I didn't rush into it, but even then, like, my mistake was giving up my other sources of income. That was my mistake at the time, and I mean, I consider myself now a full-time trader. I mean, it is my, I would say, main source of income now, but it's not my only source of income, and that's what's really important, and it really helps you, because even the good traders, you will go through times where you feel like you're not making any money, or you might, like, I had a red year last year. I mean, I've been green every other year, since 2019, but last year I had a red year. So it's like, but it didn't.
Did you still pay yourself in that year?
I pulled some money out of the account because I knew I wasn't trading as well. I did pull some money out of the account. So again, it's just one of those things where it's like, having more money in your trading account is not going to help you trade better. It's not,
That's like a common misconception.
Yeah. And it's like, here in the US, it's like, you do have the pattern day trader rule. And so it can help to have more than that, just so you're not under the pattern day trader rule. But other than that, having more money doesn't, necessarily help you. So, yeah, if I'm not doing well, I pull money out of the account, so I'm risking less. For me, again, it's like, I have to earn the right, just like let's say you're a pro athlete, right? And you're not playing very well, they bench you, right? They'll bench you, like, you sit down because you're not playing well. And I think trading's the same way. It's like, if you're not trading well, either size way down, or just stop trading, just paper. There's nothing wrong with and in fact, last year, there were a few times where I took a couple weeks off just to paper trade. Like, I felt like, I'm not doing well. I need to, kind of reestablish some things. And there's nothing wrong with doing that. Again, as long as you have that long-term thinking, you're like, hey, I'm going to be trading for 10, 15 years. So I want to, taking a few weeks off here, or even a couple months or whatever, is not going to, the market's always going to be there.
Yeah.
Like, it's not all of a sudden you're like,
now they're open even longer than they used to be.
Oh, I know. It's like they're basically cryptofying the markets now.
Pretty
so it's
much.
like,
Pretty much. Like, what did you think in terms of, like, how was your mindset when you had a red year last year? Like, what were you thinking coming into this year?
That's pretty crazy, right? I can't even imagine. If that happens to me, I don't even know how I'm gonna act. Especially after trading for that long. This guy started in 2008, and he had a red year in 2024. Damn.
I mean, I was frustrated, but but at the same time, like, I just need to iron out the weaknesses in my strategies. So, like, a lot of the strategies I've been working on for myself are what I would consider that they're lower frequency strategies, and that I have a bunch of different trading strategies, but every strategy will only produce like 2-3 trades a month, right? And so the thing is, when you're developing a strategy like that, number one, it's hard to gather enough data, because I'm a very data-driven trader. It's hard to gather enough data on a strategy to figure out where all the weaknesses are, right? And so sometimes you're kind of figuring out the weaknesses as you're going along. So that's what I've been doing. And like last year, I just uncovered I thought I had, I think I'm getting this strategy dialed in. And the market would be like, nope, sorry, you're wrong. And like, it would reveal like a major weakness I had in, whether it was in, the risk management on a strategy, or maybe a lot of different, there could be some details of the strategy that I needed to fix, to make it better or whatever. So, but it was always something different every day. Like, I might discover a weakness in this strategy on this day, then the next day it'd be a weakness in a different strategy I discover. And it was just like, I had a lot of losing streaks because of that. But,
how important is it, though?
Well, it seems like more like he was flipping strategies around, right? Is it what caused that? It's a bit odd. Go through like a strategy revamp with all your strategies.
Looking at different strategies and optimizing strategies.
I think it just depends. Like,
Interesting though, right? Could happen.
You're a person who, if you're fine with having one strategy that maybe doesn't give you any opportunities for a while, but then gives you some opportunities again. That's great. I mean, you can do that. For me, I guess watching the markets every day, it's like I'm always seeing something. I was like, oh, I think I could develop a strategy off that, right? And it's just that internal drive I have to like, if I think there's an edge there, I want to develop it. Like I just have this constant drive to, do
Has that been like
So
a positive and a negative for you?
I think it's a positive in the long run because I think I'll have more consistency over the long run because I'll have a big set of strategies I can draw from. So if one strategy dries up for a period of time, I still have some others. The negative is like last year, you do go through a lot of difficult losing streaks and things like that because, because like I said, the market will expose any weaknesses that you haven't thought of, or haven't established. So
to go back to the market conditions talk that we spoke about earlier, one thing you mentioned in terms of like, it's like the pro athletes, as you say, and the analogy you can do with that is a pro athlete might have a particular skill set that they're really, really good at. Let's take basketball as an example. And I'm honestly not a basketball fan or watch it or anything, but hopefully I won't, butcher these analogies. But essentially, if one player is amazing at 3-pointers, it doesn't mean that's the only thing that they can do and that's all they do. They're still well-rounded, let's say, defense and other types of shots, etc. But that might be their like A+ sub. That's their thing. Is it similar in trading? Like you may have like your really high probable trades that really you're seeking out, but at the end of the day, you still need to be a well-rounded trader, be able to adapt to the markets. As you say as well, like you might have a losing streak, and you might get benched, but then your job as an athlete, as a performer, as someone who wants to be elite at what you're doing, is to then go and review, find where you're missing gaps, find how you can get off that bench and back in the game.
one thing that's constant is the market will change. Like it's been constantly changing. I mean, I've been through I've seen so many things in the markets and so many different things. Now but at the same time, even though market conditions change, there are some things that just tend to repeat themselves over like certain, I would say, concepts. So like, pump and dumps have been around since, they used to be really frequent. They're still around, but how they manifest themselves changes. So like, when I first started, it was tons of like pump and dumps on the OTC markets, right? There's just a lot of mailer pump and dumps and things like that. And that's one thing I'd learned from Tim Sykes about those type of things. And but the OTC market's dried up, right? Well, now you're finding these pump and dumps on the NASDAQ. And so there's a concept there. Obviously, we know how pump and dumps work and everything like that. It's a general concept, but how they show themselves changes over time. And like I said, with gappers, right? I gave you another example there. It's like there was a period of time where a lot of the gappers were higher float gappers, multiple gappers per day, things like that. Now it's like they're still gappers, but now it's micro floats and things like that. So this idea of shorting gappers it can be an effective strategy still, but how you do it, changes. And actually, it just made me think of pro football and how offenses and defenses change over time. It's like I think back in college. I grew up a University of Washington Husky fan, and they won the national title in 1991. And at the time, they had this amazing defense there where they'd stack all these guys on the line of scrimmage, like 10 guys up on the line of scrimmage, and they would just shut down your run game. And they had the best defense in college football, that year and all that stuff. And so other teams started to copy that, right? Well, then the offenses had to adapt. So then they started doing these spread offenses and these spread option attacks and stuff like that. And so suddenly those defenses weren't working anymore, right? So then the defenses had to evolve, and you see this just constant change, and the markets are the same way. It's like the general concepts are there, even like this idea of parabolic runs. You still see all these, parabolic runs in the penny stocks and microcaps. But I've had to change the way I trade those over time.
Even in large caps, it still happens.
Shorting them or finding a time to short them, but how I do it has had to change. So yeah, and those are the things like, the general concepts are timeless, but the details can change over time. And I think that's how you have to learn how to adapt.
What goes through the process in terms of when you're noticing market conditions changing? What is it that you'll then be looking for if you need to adapt, or what are you trying to observe to say this is still working or it's not working anymore?
Yeah, it depends on. For me, it's like if I keep spreadsheets of all of strategies and that I've back tested and stuff like that. And so what I look for is like, is this a particular strategy that's worked over several years, or is it a strategy that's only works like in a short period of time but is not profitable in the others? So what I'll look for is like, I'll look for strategies that tend to persist and work over time. Now the number of opportunities might change, but if it's a strategy where, it looked like it worked for 3 to 6 months in this time frame, but then it didn't work anywhere else. It never works anywhere else. You know, even if the opportunities dry up, you know, those type of strategies I'll just toss. I'll get rid of them because I'm just like, they're so market condition dependent. Because there are times where you can. Well, I think a perfect example is the Nasdaq bubble in 2000 or whatever, 1999. There were tons of people that, I mean, literally, you could just buy any .com stock and it would go up, right? But that's not a long-term trading strategy, right? It was doing something like that was very, very market condition dependent, and it literally worked in that 1 or 2 year time frame, and then hasn't worked since,
Yeah.
right? So stuff like that, I'm just like,
kind of like crypto in like 2016.
yeah,
18 period.
and so those type of things, like those aren't long-term type strategies.
In a
that
bull
I
market,
use.
everyone's a
Like,
genius, right?
one particular gapper strategy that I've been use, and I've got a really good sample of trades. Even going back to, I have data back to 2015, 2014. It was working back then, works now. The number of opportunities changes over time. What's interesting though is over the past month and a half, it hasn't been that profitable. Even though I've had trades. Now I'll keep monitoring it. If, let's say, over another 2 or 3 months, it's just like not working anymore, well, maybe I just have to toss the strategy or may have to modify it. My guess is it's just a temporary thing in the markets. It seems like, I think lately people have just been buying gappers, like no matter how much they're up, and
Yeah,
it's just been kind of,
The last 2 years in the stock market has been really, really, really insane, hasn't it?
yeah. So
At
yeah,
least
that's
some
kind of like how I
pumping.
evaluate things. But I'm evaluating things every day.
Do you have like a fixed sort of tickers you're looking at, fixed stocks that you're looking at, or is it more so what's in play and what's showing volatility or signs of
Yeah,
opportunity?
it's whatever what's in play for me. I have scans. I run. I have a whole routine. I have a routine when I wake up in the morning. I use scans, SCANZ. I use that software to do my pre-market scans for potential opportunities.
What's it called?
To do my pre-market scans for potential SCANZ. I routine when I wake up in the morning. I use scans, SCANZ. I use that software to do my pre-market scans for potential opportunities. And then at the end of the trading day, I use stock fetchers. I've been using that for years and years. And I still use that for my end of day scans for potential setups for the next day. And so, yeah, so it's whatever's coming up on my scans that, meet whatever criteria I'm looking for. So
Definitely. Is there anything in terms of, like how we've had the AI play, we're getting like the quantum computing play now? Is that something that's on your mind as well, like fundamentals or particular, I don't know how you describe it, but particular sort of sectors that are really getting volatile, getting a lot of momentum? Is that something that's on your mind?
No, I don't really pay attention to the sector momentum because I'm mainly a technical chart-based trader. And so I'm just looking for whatever things that meet my criteria. And usually it'll happen to be stuff in whatever the hot sector happens to be. But I'm not like trying to chase a particular sector, like from, even there's some traders who are good at that. Like they'll find a good sector that's getting hot and they'll go long on this stuff. And, I'm not very good at that. Like, I would rather just take my chart-based setups. And the reason I like the chart-based setups is because it's easier to back test, stuff like that.
Don't know where the market's
I
going.
don't know if I agree with that. I mean, like, I'm not trading traditional stocks on a daily basis, but if I was, I would certainly be looking for sectors that are like active, right? So that's where most of the volume's gonna be. Like, sure, you might have a chart set up that's looking like it's gonna break out or whatever, but might just end up sitting sideways because no one's volume's going to it.
About your trading. Just
So curious if he's like scanning for volume or not. Ideally, he probably is.
get informed on exactly what's why every pump subscription trading tool for all. After with my video,
Because
It's easy to just back to
try and correlate what news this episode. Because it's hard to backtest both, right? Backtest both together because it's hard to then try and correlate what news or volatility was coming in and for what reason.
It's really hard to do that, but it's easy to just backtest based on charts and price action and things like that. And that's really what I am. I'm just a, price, volume, that type of thing. That's kind of the type of trader I am.
Okay,
And
so
I
he's
work
just
with
volume.
and stuff like that too. I mean, obviously, but
You mentioned Tim Sykes. Obviously, that's where you came across and sort of an introduction into the markets, etc. But did you have like any mentorship or guidance or education when it came to building your strategies, or was it more so you just chart time?
no, it was just me just spending time. Like I'm mostly just self-taught in a sense. I mean, yeah, Sykes kind of got me started, like with his kind of general penny stock parabolic patterns and things like that. And I've picked up little tidbits from other traders. And that's the other thing. It's like I'm always wary of any trader selling a system because I'm like, if your system works so well, why do you need to sell it? And the other thing is, the thing about that is too, is like, if too many traders follow a strategy, it stops working. Like me, it's like, I will never give the details of my trading strategies. I'll talk about concepts and stuff, but I'll never give the details because I don't want to crowd my own trades, right?
And that's not necessarily
Because
true,
then it'll stop
right?
working.
Like For some strategies, yes, but other ones, it's just like the whole market has to revert at some point, right? There's no arbing not out of the market. Like when the Titanic is starting to change direction, like it's changing direction, right? Ain't no going back.
And so
Is that more of a bigger thing in sort of stock trading versus say futures and forex and stuff?
I don't know because I don't trade forex, I don't trade futures, so I'm not sure about that. But I definitely know in stocks, like especially for day trading and stuff, it's like I have never made money trying to follow another trader, like whether it's following the trades in the chat room or whatever. Like I've never done, and I would say most traders don't. That's like things happen too fast. By the time another trader's in, like it's probably already moved by the time you get in there.
Agree.
How important do you think it is though for long-term consistent trading for a trader to really just focus on themselves, whether they're self-taught or not, but more so putting in that time themselves?
Oh, I think that's the most important thing. Like you can't get around it. You have to put in the time yourself. Like I can't say I probably spent hundreds and hundreds and hundreds of hours just watching markets or studying charts or back testing or whatever. Like, and here's the thing: when you develop your own strategies and your own ideas, you'll have more confidence in your trades because uh, you just what works for you, right? I mean, when you're trying to follow another trader, it's like, well, where is their stop loss? How are they managing their risk? Like what, how do I know that this is a profitable strategy, right? It's just again, I'm not saying you can't learn from other traders because I've borrowed concepts from other traders.
Is it stuff that you would recognize in the market? So when you would see that trader talk about it, it would make sense. You think, okay,
yeah,
but
yeah,
then when looking at the markets, you're going, actually, wait, I see that
yeah,
consistently.
yeah, and that's the thing. It's like, I mean, Sykes is a perfect example. He would talk about his parabolic penny stock patterns and like, and yeah, I mean, you can see that. You still see that to this day. You see these big, parabolas and whatever. How they present themselves changes a little bit here, over time, but the general pattern is still there. You know, Also, there was this one when I was on Twitter. There was this one trader I followed. He had this concept called VWAP Boulevard, and it was just kind of this concept that like if you look at the VWAP of a previous high volume day, that kind of tells you who's underwater, right? Are the longs underwater? Are the shorts underwater? Um, and that can be a potential resistance or support point or whatever. And so that was an idea where I took that concept and I developed a few of my own strategies around it. But I had to do that on my own. I had to still
Interesting. Actually,
study
that's
it,
interesting.
right? It's not just like it's not as simple
Anchoring it
as
from a
saying,
high volume day
oh, it's above the VWAP. I'll
makes
buy,
sense
it's below the
too.
VWAP. I'll sell. Like that's not a strategy that will work, right? Like, and that's the thing. It's like I constantly come back to, um, there's general concepts that I don't mind sharing and talking
I
about,
mean,
but
typically the high volume days are the highs and the lows, which is like how we're using the anchored VWAP. So I guess it kind of happens to align that we are using it that way. But if you do get like a high volume day in like the middle of like a range or something, it's an interesting thought actually. Yeah, you got a nice little nuggets to go investigate right there.
it's the what makes you a profitable trader. It's the details around those concepts of how do you know what an entry signal is, right? Or how do you identify a setup? How do you know when to enter? How do you know where to place your stop loss? How do you know where to take profits? That's another thing. Like you got to know, like taking profit. Where to take profits is just as important as where to enter a trade. Also, and I've talked to there's this other trader I'm friends with, Michael Good. Uh, I've known him for a long time. Something that he and I've discussed is like also being a good trader means knowing when not to trade. Like knowing when to sit on your hands and not trade is just as important as knowing when to trade, right?
Those are the days that would save you, right?
Yeah. It's just like
True.
and I have no problem like.
Like for instance, if I wasn't in these
But
trades and yesterday, like we were talking about this zone in the juice box, and we never ended up getting it. Put in a situation where it just ran up on me, and I'm just sitting here like, fuck. That's just how it goes, right? Sometimes they just run off on you, or they reach the zone. I don't know when to sit in your hands and chill.
it's not an opportunity there that meets my strategies, then I don't trade that day. And that's why I tend to ignore the noise. Like I don't. I'm not really. I used to be in the Investors Underground chat room some, but even when I was in there, I didn't. Usually, I wouldn't even go in there because like I don't want what other traders are doing to influence my decisions. I don't if I see some people making money on a ticker, like I don't want to have that temptation to jump. If it's not part of my strategies, I don't. I just so I'm really during market hours, the only things I have open are obviously my broker windows and my charts and my scams. I have no trading chat rooms, no social media or whatever. I just want to be focused. I want to be a purely self-sufficient trader, that I don't need a chat room or anything like that. Again, I'm not saying those aren't useful tools for people, but if you really want to be self-sufficient, you got to be able to learn to trade on your own,
True, true,
How
true,
can
true.
traders think in terms of probabilities?
Big
Yeah, so
true.
I think that's really, really important. When you take a trade, you have no idea whether the trade's going to be a winner or loser. You don't know. But if it's a trading strategy you developed and you have a sample of trades, you will know your probability of winning or losing on the trade. And the thing what I like about that is if you know there's an edge to your trading strategy. And what I mean by edge is, like, if I take 20 trades that meet the strategy, I'm profitable, over those 20 trades. It doesn't mean they're all winners. I mean, maybe only half of them are winners, right? But are the winners consistently bigger than the losers over time? I mean, you can even make money with a less than 50% winning trade rate if your winners are really big and your losers are small, right? So your probability, you have to think in terms of probability. Okay, I'll take this trade. I don't know if it's going to be a winner or loser. I'll put my stop loss in, and if it's your stop loss, you take the loss, because you know that, hey, as long as I keep taking this setup over time, I will make money over time. I may not make money on this one time. And I think that's an important mentality to have, because losses don't hurt as much when you know it's a strategy. When you've gathered enough data on a strategy, hey, I know this is profitable over time. But as long as I keep the losses small, and I
think that's a necessary component, because you mentioned earlier about being really a data-driven trader. Is that a component of the probability mindset, is having the data?
To me, it is. I mean, but I would say even like a discretionary trader, I think they are still probably data-driven. They don't know it. Like, maybe they're just good at, like, the nuances, or they've kind of just seen this pattern in their mind so many times. Maybe they haven't kept hard data on it, but they just intuitively know from seeing it over and over again that, okay, if I set my stop here or whatever, for me, it's like I want the hard data. Like, I'm a data guy. I'm like kind of a stat nerd or whatever. So it's like,
how hard is it to not get married to the data?
It's hard for me. I mean, I don't know. It's like, for me though, I like being married to the data, because it reinforced, like, a perfect example is yesterday. Yesterday is a perfect example, and this is where being data driven was actually very helpful to me. I did some trades pre-market, and I was on this one ticker, CURR, was the ticker yesterday. It was a gapper. I took a trade on it pre-market. Put my stop loss in, then it spiked out of the open and I hit my stop loss. So I was down, but again, to me, it wasn't a big deal, because I have enough data on this trading strategy. I know I'll make money over time on it. On that same strategy, I have a rule that I am allowed to re-enter if it comes back near my price I was in at before, and I can set a similar stop. It hit that criteria, and again, that's based on data. So I re-entered it again. Boom, I got stopped out again. And then with slippage and stuff, it was down like maybe 2.76R or whatever like that. So after two trades, and like, but again, mentally, I wasn't phased, because I was like, hey, I know, because I've gathered a lot of data on this stuff. It just happens to be 2 losses in a row on the same ticker. A little bit later in the day, another opportunity presented itself. It was a different on the same ticker. It was a different strategy, but again, data driven. And it was actually a strategy I just recently developed. I was like, oh, here, that meets the criteria. I'll do a trade. Entered it, got another trading signal for a different strategy on the same ticker a little bit later. And I was still in the other one, hadn't been stopped out or anything. So I added to the position on that strategy. And I got a third trade signal later in the day, added to the position. And I end up, on that last 3 trades, I ended up netting like, close to 8R or whatever. So I ended up had a 5R day yesterday. Even though I started off in the red. But again, it was all the data that just like made me comfortable with taking, even though I had 2 losses in a row on the same ticker, the data said, hey, you can still take a trade on this or whatever, and I didn't let it,
And for your actual trade, say in your journal, to match the data that you collected, you have to essentially take those opportunities when they present themselves.
Yeah, that's the thing. You do have to take the trades. Like, you can't, now where I've struggled a little bit, and this was, I think, partly why I had a red year last year too, is like, I'll gather data on trades, but the market will always test I'd say the bounds of your trading strategy.
I don't know, man. Like, like, I feel like if you're not a discretionary trader looking at data live in the moment, and you're just doing it based on like predetermined setups that you're finding from scans, like, you're just like, there's just some ceiling you're never gonna get past, right? Again, maybe that's a wrong way of looking at it, but like to me, I feel like there's just like it's like a skill diff, right? It's fucking skill diff is what it is. If you're like an elite discretionary trader, there's just a skill diff you're not gonna get if you're doing what this person is doing, which is fine, right? It is fine, not the end of the world. Not everyone cares to make it to the higher levels. But like I'm sure that there's like in some of these situations he's describing where he's taking some of these losses, you probably could have avoided them, right? Realistically. Because the thing about these systems is that like when you take a strategy or when you have like an approach like this, you have to take the trades, whether you agree with it or not. Like it's in your system, and that's what you collected the data on, and you have to rely on the math from your data. Whether you like it or not in the moment, you just kind of got to go with it. So a lot of pros and cons in doing that.
And that's the hard part is like, you know, if it's not within the meat of the strategy and it's kind of on the gray areas, you know, let's say I have some strategies where, you know, it has a minimum float, right? You know, let's say the minimum float is, you know, 4 million shares or whatever. I don't know. Well, when I start to get, you know, opportunities that are like 4.1 million shares, 3.9, you know, as I start to gather enough data around that, you know, I start to see like, oh, you know, maybe I need to up that float to 5 million or something like that, you know, because there's always edges or thresholds where, for me, a strategy starts to lose its effectiveness. Like a lot of, for example, gappers now, and again, this is just based on data collection. I won't short gappers usually less than $2 per share. I have a few instances where I will, but, and it's just because I found that statistically, it just becomes less profitable for me over time. So for me, it's just more, again, focused on the A plus opportunities. I'd rather keep it A plus and not like a
Interesting.
C or something like that, you know?
Of
So
course, that makes complete sense. And how much does intuition play into your trading at all, if at all?
yeah, for me, not much, you know, because there have been so many times where my intuition has been wrong, you know, because it's just like a gut feeling. And that, you know, I mean, there are times where I had a bad feeling about a trade, yet I made money on it.
I was going to say that's been a theme that I've noticed is that people always when they say that I thought this trade was going to be the best trade ends up being one of the worst, and the flip side being true.
And that's where intuition doesn't work for me because it's just my emotions, right? Like, and in fact, that trade yesterday, like that, you know, when I was in it, it was holding up through later in the day, and I was like, oh my gosh, you know, is this going to spike on me again? I'm going to take more losses on it. Like I wasn't feeling good about it, but my data said, you know, it's a good trade, so stay in it and stick with it. And I did, and it ended up working out great, you know. But I had a bad feeling about it for quite a period of time, like, you know, while it was going on, like, you know. Um, so and yeah, I've had trades I had really good feeling about where I'm just like, oh yeah, this, you know, I think, you know, I'm pretty sure this is going to work out, you know, and I doesn't, you know,
Yeah.
yeah.
What was your mindset like when you crossed the 7 figure threshold? Was there any sort of challenges that arose that you might not have foreseen?
For me, no, surprisingly, no. It felt good and stuff like that, but I didn't because I'd learned my lessons from the first go around. I didn't change my approach. You know, I didn't. I think the problem is I when first go around, as I started getting really good, I started getting more greedy and more aggressive. This time, I did not get. You know, when I crossed that threshold, I did not get more aggressive. I said, what I'm doing is working. I'm just going to stick with what I'm doing, and I'm going to keep paying myself. And you know, and to me, that was just such a good decision to make. You know, because like I said, you know, again, I've gone through some struggles since then. You know, no huge drawdowns or anything like that, but you know, like I said, I've you know had losing streaks and you know extended period of times, and like I said, you know, a red year last year. So
Because it's interesting because a lot of people I've seen that they put in really good work, see a
The
lot of
seven-figure
progress, and then
trader.
they hit something.
I hope so. I've been trading since 2008. Fucking hope so.
Something happens whether they've made a good amount of profit one time or whether they hit a particular threshold in terms of their capital or whatever it may be. Something happens after some really solid work, you know, really whether they did everything right, back tested data, were disciplined, and then they make a change for some reason, right? They make a change, and then that change ends up just sending them right back to the beginning. And it's always just really unfortunate always to see, but it's a common theme that I've seen.
This guy trades like a like he's been talking about the stuff you do a lot. Like, but he's like he's one of these like short or like low cap shorters. Seems to be the strategy he's talking about the most.
Not only with other people, with myself, when I was trading, it was the same thing. Like I would do the right things, I follow a particular discipline, then things would work out because you've done that, and then you'd change something randomly. And I've always just found it fascinating, that mindset. I don't know what it is. I'm not sure if it's again those. In my opinion, it might be the case where everyone has this belief when you come into trading that once it clicks,
Oh, yeah.
and then there's not really any challenges, and you're always just going to kind of make money, even if you take some losses, but you'll make money overall. And I remember I used to think that is like once I had that really big profitable month one time, the first time, that's it. And I remember it happened, and yeah, it felt great or whatever. But then I remember feeling really deflated after, and I wasn't sure why. And it was because I built this huge image for years when I was going through the trenches and I was struggling. For years, I built this huge image of this moment
In the
where if I land that
trenches.
big P&L, everything will change. But nothing changed, other than the fact that yes, I had a bit more money in the bank from that withdrawal. Otherwise, nothing else changed. And then on the back of that, the next month I was trying to chase that big month again, which obviously resulted in a flat month. And then after that, a month where I blew up. So I think it is that. What do you think? Like,
Yeah, I think that is too. It's like you you think I've made it. I'm and again, but market conditions change and stuff, and for me, I think it's just for me the reason I didn't change anything is that was just the experience, right? It's just the experience I've had, over more than a decade or whatever of going through some of the typical downs that traders go through. I mean, I used to make all the rookie mistakes and auto bang stop losses, not paying myself or whatever, and now it's like, you know, now my biggest struggles are just refining my strategies now, right? And like I said, I don't take too much risk anymore. I don't, I almost always obey, pretty much always obey stop losses, all those things. So I don't make I don't make the rookie mistakes anymore, because I've gotten hurt too many times doing it. That's the thing about trading. It's one of those things where it's like touching the hot stove once is not enough. It's like you got to touch it like 5 or 6 times and get pretty severe burns before you finally before you learn not to touch the hot stove. It's kind of weird that way, right? You think if you touch it once, you wouldn't do it again, and
it is true. No, it's 100% true. And I think there is no avoiding the pain or the mistakes. Yeah. Like there isn't avoiding them, but it's about, I think, trying to speed up the learning curve eventually. Like so getting to a point where instead of it being the 5, 6 or 7 or whatever it may be, getting it down to 2 or 3, ideally. Is where, say, the elite traders find themselves getting towards. So that even they will make mistakes. I think that's a misconception where people, again, assume that eventually you just get to a point where the market's easy.
I think the hard thing a lot of people struggle with, probably everyone does, because I'm sure like I had probably similar experiences at times without even knowing it. Like it can be hard to know, like, what did you do wrong, right? Did you do something wrong? First of all, right? Did you do something wrong, or did you just get unlucky in a highly probable scenario that would have likely gone your way? And if it wasn't one of those scenarios, then like, what did you do wrong? And you have to kind of backwards engineer it, and like there's a lot of learning to be able to identify those kind of things. If you don't know, if you're like unaware of these things, then it's a bit hard to backward engineer.
And I think a large part of that's probably social media and other people promoting such a message.
Yeah, I totally agree with you, because like, and this is why I like Kinfo. I really like Kinfo because you can't.
What is that?
You can't really fake. I mean, there's probably ways to fake it, but it take a lot of effort. You can't really fake your profits on Kinfo, right? Because it ties to your brokers on the back end. You can't add or delete trades. You can't like make yourself look more profitable than you really are. The thing about social media is so many traders will post their gains and never post their losses, right? And so it gives this really distorted image on what trading is like.
Oh, interesting. Some like journaling app.
That's why when I'm on podcasts like this, I'm like 100% honest. I'm like, look, I mean, I've been trading a long time, and I consider myself a good trader. And yeah, I'm ranked in one of the top 15 or 20 in a Kinfo or whatever. But it's hard, and it's still hard for me, right? It's still challenging for me. It's never become easy, and I just want all traders to know that it will always be hard. It will always be hard. And
what keeps you going though?
Interesting.
Like what keeps you doing it?
Maybe I like the challenge. Maybe it's just that stat probability geek in me that just loves the whole idea of trying to make money based on probabilities and statistics or whatever. I don't know.
I think it's that challenge.
Yeah.
Honestly, I think it's that challenge. I think that's what the best traders and the ones who do it long term. It's just that challenge of what the market brings.
Yeah.
It's fun, right? It's the competition.
Trading the markets and to do it well and to do it long term, you have to bring your best. Yeah. And sometimes you won't be your best. That's fine. But it's that constant reinforcement of, hey, how can I be my best today to win in the markets, to beat the market essentially. And some days you do it, and hopefully even if it's not a case where you're most of the days you're doing it, you're still profitable because of the data, the edge, which is I think where the struggle comes in, the hard bit comes in really, because we're naturally ingrained to assume if we lose more than we win, then we're a loser. Yeah. But in the markets, that's not true. Yeah. Right? And the same thing being that if you put in all this, like last year, if you were working a job, and you did all that work, you did all the work for the whole year, you're not going to come out red. You know, you're gonna be paid. You know, while with the markets, it's so different. You put in all the time and effort still, and you do everything that you're meant to do in terms of turning up and everything, but you could be red. You could essentially be taken money off you, and I think that thing is what really is unnatural to our minds, because there's nothing really else out there that is like that.
Oh yeah, totally. And that's where like sometimes it can get you down because you're like I mean, and even last year there were times where I felt down because I was just like, God, like I've been doing this for over a decade, and it's like, you know, and I'm still like struggling at times, right? You know.
Yeah, that was
But
really
again, I know
crazy,
that-
right? To think about that, like what they mentioned earlier, it's tough to have a red year after trading for like what 10, like what would it have been? 12, basically a red year after 15 years of trading. That probably would fuck with your head, right? I'd imagine. Interesting.
it just needs some more data on some of these strategies. I knew it's like over time I'll refine it and it'll get better, and it has been getting better. And like I said, I mean, just this past week I'm like nearly 10R the past week, and yeah, but yeah, it is frustrating to put in all that work, and sometimes my wife will ask me like, you're doing all this work and like and like, you
It's
know,
a hard thing to explain.
yeah,
Well,
it is a hard thing to explain, but it is one of those things where and me, that's just been a little bit, but my nature, you know, I mean, there's tons of things in my life where I worked really hard at stuff and didn't always have the success I wanted, right? I mean, I was a competitive swimmer in high school, and I trained hard, worked hard, but I was just never more than a mediocre swimmer. And I actually got sick all the time. I got sinus infections, I don't know, from the pool or whatever. And so it was just one of those things where, you know, sometimes the hard work didn't pay off. I mean, for me, trading overall, the hard work has paid off. I mean, right? But again, I think that's where the risk management, paying yourself
That's hard to
reward,
believe you have a red
don't
year at
let your
that
hard work
point.
go to waste, in the sense like if you're struggling, you're
I'm not the first one to say that. Who was it? There was the funnily enough, the only other person that has said something similar on this podcast was also another short only trader, like the low cap parabolic run up trying to short it. It was some dude who was like from Vancouver. Or was it? I'm sure we'll go and find it because it's pretty recent too. This guy as well. He had like a red year after being profitable for I don't know how many years. Same story.
the hard work, I would say that's not a waste, because you're still learning valuable experience, right? But don't let a bad day or whatever wipe you out, or whatever, you know. That's where suddenly all that hard work you did, you know, that's where it can really be, you know.
because it creates almost a negative feedback loop a lot of the time. Yeah. To finish up, I'd love to just ask you a question in terms of, you know, blowing up. Like, there's a lot of people out there who are still going through that phase. You know, some have maybe worked really hard last year or the last few years and have ended up in that position coming into this year. Some are maybe by the time this comes out just experiencing that right now. What would your feedback be to them in terms of
Don't
turning that
blow
around
up.
and trying to get into a better position like you did?
I say, and you know, I tend to repeat myself with these things, but I think it's because it's so important. I mean, I said, number one, have another source of income, right? You know, that takes the pressure off, so you don't have to make money trading. Number two, again, if you're not trading well, size down. Like I said, I'm 1 to 2%. Go down to 0.5% if you have to. You know, 1/4%. That doesn't matter. Like make yourself earn the right to bigger position sizes, right? You know, I mean, you know, like I said, treat yourself like an athlete. If you're not playing well, then that means you got to practice more. You got to sit on the bench or whatever. And like, you know, and don't be afraid to set. Like I said, you know, after my 2014 blow up or whatever, I mean,
I don't
sat
know
out
if
the
I
market
like
for
that
almost-
approach, right? Because like, aren't you kind of like mind fucking yourself when you do this? Like, oh, I'm trading so shit. Let me start sizing down. You're kind of like putting doubt in your own mind and your ability, like in your ability, like lowering your own confidence. I don't know. I'm a huge fan of that. I think you're better off sticking with like your data and setups, right? Maybe it's just me.
2 years. I just paper traded for 2 years, right? Because the market's always going to be there. It's not going anywhere. It's always going to be there. You're not going to, I think too many traders get FOMO. Listen, there's trading opportunities almost every day. I mean, it depends on your strategies. You know, if you have a
True.
low frequency strategy, maybe not almost every day, but still, I mean, there will be more trading opportunities. It's not like if you sit out the market for a month, you're suddenly going to miss all this opportunity to make money or whatever, you know. And I think a lot of FOMO like really grabs traders. I think too, like, I think the sense that I've become a more mature trader. I mean, it used to be I couldn't wait till Monday, right? Couldn't wait to trade on Monday. You know, markets close on the weekends. But now I actually like having the break, right? You know, it's like, you know, I mean, I'm not saying I still love trading, but I do. I mean, now it's like today the markets were closed today, right? And
Worked out really good for us.
and number one, I can sleep in. You know,
Yeah.
I don't have to wake up at 4 in the morning, whatever, because I'm on West Coast time. You know, because that's, you know, when that primary pre-market trading starts. So it's like I was like, oh, good, I can sleep in. I can have a day off or whatever, right? You know, and I think that's another sign is like when you start treating trading like, um, because you have to ask yourself, are you just becoming a gambler, right? Because I think, you know, is it an addiction? Do you have a problem not, like me? I have no problem not trading. Like, I have no problem having days off, having a week off or whatever. If you have a problem taking time off from trading, that means you have a problem, right? You need, like, if you don't feel like you
As he trades 7 a.m. on the West Coast, I'd move. I kind of like that setup this guy has. Like, well, if I was trading like the way he does, or like how a lot of people do, just kind of market open the first like hour or two, I kind of like that. Wake up in the morning, do your like trading session, and then you just have the rest of the day to do whatever. Kind of nice, kind of nice. This sounds nice. A little on the early side, I suppose, but
you can step away from the markets, that's where you got to recognize, okay, I've got an issue I got to fix. So yeah, I mean, just pay yourself, keep your risk low. The markets will always be there, and compounding work. You know, you can compound a lot, even risking a half to 1% of your capital, right? I mean, and like I said, again, like the percentage-based risk management, you know. Risk a percentage of your capital, and that way the position sizes take care of themselves. They'll go up as you make money. They'll go down as you don't. You know, it all takes care of itself, and you know. So
I love that. No, thank you.
Interesting
Everyone, I
video.
hope you're taking notes and drop a comment with your biggest takeaway.
yeah, we did take some notes. That high volume day anchored VWAP thing was quite interesting, actually. Might have given us a little alpha right there. He has to get up at 4 a.m. to trade for 7. Why? That's so early. Why does he have to get up at 4? I mean, I guess he said that he trades like the morning session sometimes. If I was on the West Coast, I wouldn't be doing that. I'll like stick to market open. Hmm. Yeah, I think he'd mentioned that. Plus, I'm not sure. Like, I'd imagine when you're trading, what's it called? Okay, like there are certain people who wake up and they just trade like Nasdaq or like ES futures or like whatever Bitcoin, for example, right? Or like a handful of things, like their small pool, like Tesla, Nvidia, and the futures. But when you're doing it like how this guy is, where you just have like a scanner and you're like having to monitor like every single thing that shows up in the scanner. Yeah, I'd imagine your like pre-market prep is like a lot more intensive. I don't know if it's necessary, right? I think for people that trade that kind of style, that it probably is necessary because you need to like find the best opportunities you can every day. If it's some like very niche kind of setup. But for how I trade, I don't need to do that. Almost every day, there's like 1, 2, 3 opportunities to get into something. And there'd be even more so if I was trading at like the other stuff actively. But for me, like my pre-market prep is literally just doing the juice box into the stream. Interesting. We watched an SMB video. I don't think I've ever watched one of those in the channel yet. I like this channel a lot.
For the right stocks to trade, but in a vacuum, I would argue that they are meaningless. We've seen in our quant work that we can clearly define a setup.
I don't know if this is a particularly interesting video. Yeah, SMB Capital, pretty cool channel. Pretty cool channel. You know, out of all the interviews, funnily enough, one of my favorite ones was like the Lance Bryson one, and he's the only like 9-figure trader on there. Because everything that he was talking about, like I agreed with, and he's also one of the only ones that like nerded out on video games, like actually nerded out, like professional type nerding out. Coincidence or nah? Or nah? Well, one of the few interviews where I watched where just generally agreed with like just about everything. It's very surprising how much overlap there is from video games to trading. Like extremely similar, honestly. And my arms hurt, man. I got surgery today, guys. I'm still here streaming, right? Putting in the extra hours while I'm bleeding out to death at my desk. No days off. Well, I stood up. I couldn't rest my fucking arms on my chair anymore. This for my shoulder. No, I have like I've had it before. For anyone that was here in the summer, like they remember, like around July, I had like the same kind of surgery. Like, they're just removing these like tiny lipomas. They're just like little tiny balls of like hardened fat. It's like more just like cosmetic slash check them for cancer more than anything. Why I got them, I don't know. Tinfoil theory, tinfoil hat theory. It's COVID vaccine. Call me crazy. You tell me what you think, right? So I had like I think it was like 2 or 3 lipomas since I was like a kid. And I got them removed as a kid. And whatever, never to return, right? And then I get the COVID vaccine. And like they do the shot on this arm, my left arm. And then like 6 months later, I just have like fucking 20 lipomas. With a lot of them in my left arm. Coincidence or nah? Or nah? And the way the Canadian healthcare system works, they can only remove 6 at a time. So if I had to go every 6 months to remove 6. So this is like the second last one, hopefully. I might not even go again because I only have like 1 or 2 left and they're like so small it's not even noticeable. But yeah, I have like, I don't know. I think like 5 set of stitches right now on this arm. And like 1 on my stomach. And then 1 right here on this arm. Not a big deal though. It's like pretty minor. Each one is like 1, 2, maybe 3 stitches. I get them removed. When is it? The 20th? So not this Saturday, but the next. They did call it the clot shot. It's funny because whenever I talk to like people like people that work in the sciences, and I mentioned that like it could be from the vaccine, like it's like they're offended, like, oh, how could you think that? Like, are you an anti-vaxxer? Blah blah blah. And I'm like, no, I didn't say that. But I'm just saying the timing is a bit interesting, right? Quite coincidental. And like they always act like it's such like an like egregious statement to make, as if like they have the statistical database for every single person that received the vaccine, and they know every single potential outlier effect on like the 0.0001 end of the distribution. Like, millions of people got it. You don't think there's going to be any potential like minor side effect that's not well documented? Of course, there's going to be. Could be something super random that only like 20 people get because of some pre-existing thing they had, right? On top of the more obvious effects that it had, right? Because it wasn't the clot thing like quite common actually. Like at this point, it's like a pretty well-known thing. Did the COVID vaccine cause any statistically notable increase in clots in any age group? Like, it wasn't one of the brands. I forgot which one. Like AstraZeneca, I believe it was. Essentially, they confirmed that that was the case. In young men, I think there was an increased risk. Yeah, I think so as well. I mean, I'm not like an anti-vaxxer or anything, but like if I could go, the only reason I got it is because I needed it to fly. But if I could go back in time, I wouldn't have got it. Because like I wasn't scared of getting COVID, right? Like the probability of you dying is pretty low. It's like a young, healthy male. And also wasn't like doing anything around other people, so it's not even like I got it for other people's safety, right? I was in isolation anyways, so. Yeah, this thing says that there was an increase, so you are correct. Interesting times. Boom, 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 boom. Yeah, it was super annoying. Like I had to sit there for like an hour and a half today with my arm like over my head like this, laying down. My whole arm was like numb. And the doctor doing this like surgery, this guy is actually comedy. Like we were talking about like the rise of AI in the future and how it might be like end up being like a Matrix kind of world. And he goes on some rant about like how people would be in this like hedonistic matrix with like permanent erections on Viagra 24/7, banging whoever they want. Like out of nowhere, I don't know where he started saying this stuff. I was dying laughing on the table. I was like, well, that came out of nowhere. And then he started talking to me about Trump. And he was saying how Trump is like following in the steps of Napoleon and Hitler. I was like, interesting, interesting. Very interesting. I've had some pretty interesting conversations with this guy. It's always the same doctor. Whenever I go back, it's always the same guy doing it. So like we've had like multiple hours just spent together at this point. And every time we talk about the most random shit. The last time he was going on some like huge rant about like gun laws in Canada and like how the healthcare system is so garbage. How's this stuff doing? People definitely give their unprovoked opinions of him. You know, I find in Canada, I mean, I don't really talk to Americans like per se too much. Like I know people that are there, but the people that I talk to here, whenever they mention him, like, it's very clear they don't actually research what they're talking about. Like they're just like parroting some talking point they heard on like by their like favorite pundit on TV. That's like a clearly biased opinion, and then they just run with it, right? That's like their opinion. Like the other day, I went on a hike with some of my friends, like on Sunday, and like this got brought up somehow, and they were talking about like the same kind of stuff that's going on because they were like they want to move from where we are right now, and then they were like, oh yeah, I was thinking about the U.S., but like with Trump as a president right now, I don't want to move there. So I asked them like why that's the case, and they started saying like the typical like nonsense, right? Like Nazi uprising and like how people are like the anti-immigration officers are like kidnapping people and killing them and like random shit like that. I'm like, that's not what's happening, but okay. Okay. Like people really think that that like alligator Alcatraz or whatever the fuck they called it is like actually like some camp where people are going to get just literally murdered. That's what they think you're. Yeah, I haven't been to the US recently in like the past like a year or so. Maybe a little less than that. Whenever I go there, it's fucking just normal. It just seems normal to me. Everyone's just pretty normal. But if all you do is watch like rage baiting news, you're obviously gonna have a pretty skewed perspective of like reality. Especially when that's all you're doing is watching rage baiting news, not actually informing yourself about anything further with like more depth than that. And I'm not even like pro Trump per se, right? I don't really care. Like I'm sure he does things well and also does things that are not so well. As with like most humans on this planet, extremely unlikely you're gonna have 100% agreement or 100% disagreement. But it is a cool thing to do, so that's what most people do. this thing gonna start going or what? Are we gonna break this red box or what? Or what? Interesting, right? Interesting daily candle yesterday. Tomorrow marks the 3-year anniversary of one of the biggest intraday movers this decade. Osm went from 23 cents, $22 in a day after a messed up USIP. What is that? Oh, some kind of security identifier. How did that come to be? Did people get paid? Like if they were, I suppose if they were long and that thing ended up going up because of the error, and you like sold, did you get paid for it, or did they like revoke the transactions? I looked that up and I found this link to some Reddit called r/short squeeze showed up. It looks quite active, interesting. I'm always so paranoid of Reddit for everything. Like, it just makes me paranoid. I'll say that. But I remember it was tradable initially during the drop. I traded it small and the trades were not revoked. There was like an hour period where it wasn't tradable on TOS at least. Yeah, it's unfortunate. I want to use that platform. But I see like whenever I'm looking up certain things lately, I want to like try out. Well, everyone uses that. Also, the other day when I mentioned that DAS trader that uses like direct to market trades, like how big of a weighting do you give that? Like how like if you had to like rate that on like a like importance tier of like 0 to 10. Oh yeah, shit. I haven't tried DAS, maybe I should look into it. I need to change platforms. TOS is restricting way too many low float tickers recently. There's a lot I like about TOS though. Never use it, I'm not sure, but I do see a lot of people that like do use it, right? Like for instance, a lot of the people that were in these like videos use it that we were watching. I'm just curious because somebody said basically somebody was insinuating in one of these videos that if you're like scalping on the low time frames and that you don't have like direct to market orders, you're kind of cooked basically. We start going? Can we start going actually? It'd be so nice if we could start breaching these levels. We've been waiting weeks for this at this point. Literally fucking weeks. Just sitting here patiently waiting. It'd be a nice way to end the streams before Christmas too, right? To get some nice juicy TP sip before I go home. Interesting. What time is it? It's 10 o'clock. Might call it early. Right? Might call it early. Cause I don't want to sit down. I'm just tired. Like, I guess lay down. Sitting with my arms on that thing is not particularly comfortable. It's like at a certain angle, or I'm like on the stitches. We might do a juice box and get out of here. Silver is up 114% year to date. Gold up 62%. Yeah, all the metals are doing quite strong. Copper's up what? 34. 70% on palladium. Platinum's up at 90%. Pretty crazy moves, right? Pretty crazy moves in the metals. I'm sure people that have been waiting for this for the past like multiple years are having a hoot right now. How big is the market cap of silver? $5 trillion. Interesting. Pretty high. Platinum is the third highest. Interesting. What about zinc? Did I break my trading view broke? In just the equivalent. Aluminum. Pretty crazy chart, right? Pretty crazy chart this thing is. Very curious if a gold breaks out, honestly, because I wasn't expecting this. Caught me off guard, to be honest. Like, I thought, like, I'm under suspicion that we're going to be correcting longer than this. So if we start like ripping from here, that would be pretty surprising to me. But it is making its way up there, we'll say that. This thing's about to fill the gap. Leave that thing there. Fresh breakup. I wonder how long it takes before we see 5K. Is that the next major target? Definitely a lot of the extensions clustering around here, yeah. Like here, same with like 45, 50 or so. Interesting. How far would that be from here? Seems pretty realistic. It might stop along the way for a bit of a pullback. Couple of big psychological numbers along the way, but yeah, 5,000 is the next like big one, right? Also, apparently China's like everyone knows China's been hoarding gold. Apparently, like they're hoarding even more like off the book, like low key, low key. The question is this like a sign of bad things to come or not? Or not? the gold bear porn is steadily flowing these days. Boom. One of my friends is living his best life looking at this gold stuff. He's telling me to buy gold for the past like decade. He's like a like the instead of like a Bitcoin maxi, he's like a gold maxi. Since I fucking met him. Always harping about gold. His time in the sun has finally come. Just commodities in general. That guy is like a gold, uranium, silver, like all that stuff. Like that's his shit. How's uranium these days? Uranium. Strong year on uranium as well, right? Boom, 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 boom. Boom, 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 boom. Oh, fuck. Boom, 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 boom. Woke up 1/1/2020 thinking gold would outperform S&P. Or thinking gold would outperform S&P this decade. Or certain decades where gold has done really well. 1970s chief among them. Hasn't it performed better like when adjusting for inflation? Like just generally? I mean, not adjusting for inflation. I mean, in the recent years, it has beaten it, but going back more, no. I think if you adjust for inflation, like it's done pretty well, right? Doesn't go far back enough. Yeah. Interesting. I'd say I'm a huge hoarder of gold. I'm sure it's in like one of my portfolios somewhere. Like not the one I manage, but you know, I do think I have some gold there, but not a lot though. Not like any notable amount. Was this on? Question is how high does it go? How is that thing going? And is it gonna put in like another one of those like tops where it just sits sideways for like fucking another decade? But there are a lot of people out there talking about like 7,000-8,000 gold right price, right? Not higher. And I'm not talking about like gold bulls, like same kind of people that were talking about like Bitcoin 200 grand this year kind of thing, or like 300 grand, the crazy price targets. Like people think pretty reasonable estimates given like the global macro situation and whatnot. Whatever, either way, we'll see, right? We'll be there along for the ride. Maybe we'll start trading it. Start trading some gold. In terms of this juice box, though, what is this? Okay. Boom. There are rumblings of monetary reset coming, gold being fixed to 20K per ounce, similar to how they fixed it to 35 per ounce following Bretton Woods 971. Yeah, I've seen those like gold repricing theories. I've seen read that here and there. Don't know how realistic it is, but I've come across the same thing every like month or two. You'll like see it pop up. Eight. Usually just some gold bug company trying to convince you to buy more gold. A lot of the ones that I read was related to like the US, like to get out of their debt. So like that they do, like, I mean, whatever, people question how much gold is in Fort Knox. And do they really have that much gold or no? I guess nobody knows. But like the conspiracy theories that they're gonna reprice it so they can deal with this debt situation. I'm sure part of the reason, like, why China, like, whatever, there's many reasons why China is accumulating gold, but I'm sure like that thought also creeped into their head, right? Because if they are gonna try and do that, well, then they have a bunch of gold. Like they benefit from any kind of fuckery in that regard. I think it's like, how realistic is that? How realistic is it? Yeah, I suppose if like multiple, basically if the US and China agrees, it seems like that's the only situation, right? Because there should be like some consensus between them, I'd imagine. Or like this doesn't make sense. Interesting. Boom. So Rochester is VWAP. It's pretty low down here, right? I mean, in terms of a long, like we talked about this idea yesterday, right? Like flipping the zone. So if this thing ends up doing that, it's probably gonna be that, right? How you want to stick your stops up, kind of up to you. Whether you like use this low or use something a bit more of like a lower time frame and validation with like the VWAP or structure or whatever it may be. Quite like, I mean, sure, maybe we end up sitting in like a range here, but like, these two spots are obviously like in the scope, right? These are like the main targets on both sides. If we start building structure up towards this, then probability of coming up here is increasing. I'm gonna just leave that written down. Like flipping 92.6k. And to the downside, hard to say, because we have an outside day, right? So if we start, we're basically doing like a failed auction up here at this point, like at the value area high. In which case, like this whole trade is like in mind for most people. And like this zone's been pretty suspicious, right? Kind of just like it's like a low volume cluster we keep like blasting up and down through. So might just kind of blast down again. Especially like given the fact that this zone's down here like this, we have like unfinished lows, like liquidity to grab. Like, are you really gonna trust this like naked point of control? Yeah, naked point of control on yesterday's like volume point of control, right? It's like right here. Maybe I won't be too trusting of that. If we did come down here and we did start to put in a bounce at this area, I'd probably want to see it actually print the reversal first. I wouldn't want to I wouldn't have limits set here in advance. Basically is what I'm getting at. If we are gonna bounce here, like let the VWAP like come down, do whatever. We print whatever it may be, some like head and shoulders or something, and then like flip the VWAP and go, then you can entertain that long. Even then, a little suspicious, given this is not like the cash session VWAP. Just keep all that in mind, right? Keep all that in mind. So what's like the gap looking like on this? Yeah, just keep that in mind. We'll write it down, right? This kind of zone. But just keep all that context in mind. Also, in terms of the low time frame liquidity, 902, 901. Yeah, most of it is here as well in terms of the low time frame stuff. I'm gonna just say naked point of control slash PD EOC. Yeah, be careful with that one though. Be pretty careful with that one. If the data supports it though, right? Then go for it. Maybe a little paranoid myself, but and other than that, nothing has changed, right? We already talked about these lower levels yesterday, and also like flipping the red box in the higher time frame. You kind of just go back and watch yesterday's for some more context on that stuff. The higher time frame plans have not changed. For the short, probably just be the failed auction forming here, right? It's value area high, basically. At the PD value area high. Only problem is like this isn't really the ideal spot to be doing this. Like ideally you're like making some extended move and then you do it. Not like in the middle of this like range essentially. I think there's a world where it just like kind of comes down here and just goes again, right? And not the ideal spot for this to be forming. But if that forms, right, you can take it many ways, whether you take like the breakdown or like the retest of this stuff or the breakdown down here. And that's basically it, right? Like either we were getting filled on this stuff on the move up, or you're taking this, and maybe you could have gotten filled on this pullback, or like the gap fill on CME. Ding. We didn't really fill that thing. Might end up just circling back at this point, so I wouldn't suggest chasing it. It's basically going to be this, or like the other short plans we've already talked about. Kind of same story here. The higher time frame plans have not changed. So we've been watching these levels for a while to the upside, right? Well, the only thing I will say about these levels, there's a world where this ends up being some like pretty massive like move of strength, right? Because right now it's been looking pretty weak. But essentially, people can be just accumulating here, building a base, right? And if we start to break out, then a lot of people that didn't get in on any of this move are going to be starting to chase it. It might cause like a runaway train as we squeeze. So be pretty careful. Like, yes, keep these levels in mind, and if the data aligns, it's like going to overextend it on a pump. Like, yeah, take your shot. But also be careful, right? This could be some pretty aggressive move to the upside. Especially given like how many times we bounce here. Ding, 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 ding. This would be like what? 1, 2, 3, 4, 5, 6, 7. Like 7, 8 times we bounce the zone whenever we do bust through. Definitely potential for a lot of strength there. But we've already talked about this stuff. So kind of just go back and look at those plans because nothing's really changed. That's basically it, right? Basically it. Not particularly interesting. Yeah, kind of just delete that, delete that. Been some pretty slow days, but we are grinding higher slowly. I'm curious if we can finally break out of this a bitch or not. Or not. How's Ethan, by the way? Anyways, I'm out here. I'm gonna rest. Let these stitches heal a bit. Calling it a bit early, but whatever. All right, we'll be back again. Do a quick chat shout out. Call it a night. Shout out to Lyle. Also on here. Shout out to Dev. Shout out to me. God damn, shout out to me too. Shout out to Bebo. Wait, how'd the Nikkei do? Told us to short the Nikkei. Shout out to Bebo, never wrong, right? Bebo, never wrong. I think we already did Dev, but if not, shout out to Dev. Shout out to NASCAR All Out. Yeah, we'll be back tomorrow. Kind of usual time. Curious to see how the week ends out. But for now, I'm out here. I'm tired. I'm gonna rest. My brain is mush. Stitches are bothering me. I'm lazy. Calling it a night. Later. Later.